Back to another episode of the Market Open. We are live. We are early today because we have the Consumer Price Index, which we'll be looking at live. And this is going to be a really important one because obviously inflation kind of matters to the stock market because it is the basis for dictating if we end up getting these rate cuts. And given what has happened with the Iran conflict over the past 48 hours, oil is back above 80. Back above 80 for the first time in 3 weeks. So obviously the CPI report is definitely going to be really important given what has happened with oil. And if it's bad, you know, the expectations for rate hikes go higher. Waller being hawkish yesterday, one of the most dovish Fed governors, is also not a good thing. And so we're going to be taking a look in about 8 minutes what we get for CPI. Expectations here are for it to be relatively calm, but if it's worse than that, we're going to have to see. So most of the street is estimating 3.8% on the headline, 2.8% on the core, which would be up slightly month over month on core and slightly down month over month on the headline. But, you know, if this comes in at like 3.9, 4%, if we get a four handle, obviously it would be really ugly. If it kind of stays in this 3.8 range. Gas prices did come down last month, so I think that could potentially have a little bit of a effect to the downside on overall CPI, but we're going to have to see in the next 8 minutes. On top of that, the banks have started earnings today, so we will get into the banks. Nebius got $1 billion deal this morning. We will talk about that. IBM is down 24% in the pre-markets. We will talk about that as well because IBM has taken down all of the software stocks, and quite frankly, I think the reason is so dumb. Like, it makes sense for why IBM is down. It makes no sense for why any of the other software stocks are down, unless they cite the similar reason that IBM cited for why IBM ended up taking a hit. If you don't think Palantir and Figma and Zeta and ServiceNow are going to cite the same logic behind the drop that IBM cited that we'll talk about in a second, then I think those stocks are going to be easily buy the dips today. But it does feel like the rotation is going from software to semis. Yesterday was semis to software. And we're going to have to navigate kind of how the market ultimately thinks of that today. Robert, what's up? Good morning. Chels, good morning. Arthur, if you're not early, you are late. That is correct. Thank you for being here. Tess, Shempasta, what's up? What's up? Bobby, Shadow, Hassan, good morning. CPI again is going to be in 6 minutes, and we are going to see what we get. That's why we are here early. We always show up early for CPI. I don't think I've missed a single CPI in the past 4 years. So it's always around 8:20 on these CPI days. So it's at least 4 times or at least 1 time a month. And now we're just going to see how the market thinks of it. Wall, what's up? Jerry, Custard Chips, good morning. Good morning. Ahmed, good night from Sydney. What time is it in Sydney? Time in Sydney. It is 10:24 p.m. Yo, shout out to the Aussies that watch every day. It's late for you guys. At least in Singapore, it's still 8 p.m. Pang did dilute yesterday. It's kind of crazy, dude. All of these FinTwit stocks that get a lot of momentum and hype and excitement, they pump up like crazy, and then the management's like, dude, we have to dilute. The exact same thing happened with Oust. Now, Pang has rebounded really nicely, so I don't know if it's actually going to fall today, but it was down 12% pre-market. I think it's turned slightly green. Yeah, almost turning green. It's still only down 1%. But we've seen this story so many times with the hyped up stocks. And there's some real value to Pang and Oust and all this stuff. They're just in, emerging verticals. But, they're $2-3 billion companies. So the boards are kind of recognizing the value of all these people getting excited about the stock, and they're taking advantage of it. $650 million of dilution. It was almost 30% of the entire market cap of the stock. So made sense for these companies to dilute. All right, IBM. Let's talk about that real quick. We will have a lot more to say about IBM, but we got 5 minutes until CPI. So let's get into kind of what is happening. By the way, I'm just saying this right now. I think I might go shopping today for software because I do not think the reason for why IBM down can be universalized or generalized to any of the other software names. I mean, like theoretically it could, but I don't necessarily think it's going to happen. This seems very IBM specific. So I feel like the algos are just misappropriately taking all the software names down for no reason. I think this might actually be a decent day in the long-term portfolio to just pick up some good buys here based on some of these prices. So what did IBM say? First of all, the revenue was lower than expected. By the way, this wasn't even Q2 results. These were preliminary Q2 results. So, usually when a company does preliminary Q2 results, it tends to be more bad than good. I'm reminded of Snapchat a couple years ago when they put out their prelim results. They fell like 40% in a day. So revenue was a little bit lower than expected. It was up 1% year over year. Consulting revenue was flat, and infrastructure revenue was down 7% year over year. So the actual numbers on the core metrics weren't that good. However, here's what the CEO said. In the last few weeks of June, we saw clients shift their quarterly CapEx spend towards servers, storage, and memory purchases to secure supply-constrained infrastructure ahead of expected price increases. He also said that clients were distracted by rapidly evolving industry-wide cybersecurity concerns and that IBM did not anticipate the magnitude of the CapEx reprioritization. Basically, the dude is saying, or at least he's blaming, the lack of quarterly results on CapEx spend shifting from software to CapEx. So instead of enterprises spending on IBM's product, whatever they sell, they spent towards memories and server racks and storage, etc. The reason I think this should not be a reason for why all the other software names are down, this should definitely be a reason for why IBM is down. Now, should IBM go down 30% here? I don't know. But yeah, IBM, losing $65 billion in market cap, I think is a little aggressive, but it probably should take a bit of a hit because I think the street's really kind of reading between the lines and saying, hey, it's not because of CapEx. It's because you guys don't have a product that's valuable enough to withstand the amount of money that's being spent on CapEx. Like, could you imagine if Palantir came out and said, yeah, we missed our numbers because people were buying too many memory chips? It's like the street would not tolerate that. They would be like, okay, sure, but if your software is so valuable in the age of AI, then why aren't they prioritizing your software along with the memory chips, right? So I think the street is right to take down IBM right here because it feels like they're blaming the war or something. And like you can only get away with that to an extent. You can't get away with that in a way that like establishes the fundamental basis for why your company didn't do well. I mean, you're kind of shifting all responsibility on external ways in which the market is spending capital versus why your software is not valuable enough to be part of that capital allocation, which means that, look, maybe people just didn't think IBM's product was necessary to an extent in Q1, and they shifted their allocation of capital, which in my opinion just means that the narrative that a lot of the software bears have had this whole year that, some software spend is being vibe coded away or it's not as necessary, that's true. It's real and it's affecting IBM. But that doesn't mean it has to affect Palantir or Zeta or Figma or ServiceNow. So I think if these names really take an ugly, like I think the software names are probably going to be a good short today if you're trading them. But I think if you're investing for the long term and just putting out shares to make sure you have over the long term, ServiceNow down 8% on that. Unless Bill McDermott, Alex Karp, and David Steinberg and Steve Huffman, Reddit CEO, come out and say, yeah, we're not making any money or we're not beating our numbers because people are buying memory chips. Like that would be insane to me. And I don't expect them to do that. So if they don't do that, I think these dips are going to be rewarded. But today might be a day where the semis take a lot of the love from software. And, we're going to see how the market ultimately interprets that. All right, CPI, we should be getting in about 5 seconds. I am waiting for it right here. The headline expectation is at 3.8. CPI comes in 3.5. Wow. That's lower than expected. That's lower than expected. Look at that candle on SPY. Maybe that saves a lot of these names that were getting hit. 3.5 versus 3.8. That's not bad. That's not bad at all. Let's get some coverage on that, and then we'll get deeper into the numbers.
Yeah, about 4.6. Here we go. This is our June release of the Consumer Price Index, expecting a headline number to be negative 0.1%. This is 4 times more negative, minus 0.4%. That would be the biggest negative drop that we've seen since 4/20, since basically COVID timing, which really affected, of course, all of the inflation data points. So that goes back, basically 6-year low. And if we look at the CPI month over month on the core, also under expectations, comes in at goose egg, 0. 0 would be the smallest amount. It would equal Jan of 21. To find a smaller change or a more negative change or minus 0.1%, that's May of 2020. And if we look at the year-over-year numbers, year-over-year headline, 3.5, 0.3 less than expected, much less than the 4.2 in the rearview mirror. That would be the lightest since March of this year when it was 3.3. year over year. Core 2.6, 0.2 less than expectations, 0.3 less than the rear view mirror. 2.6 equals March. 2.5 brings you to February of this year. Quickly, if we look at the indices, 1913 this started CPI, and the indice comes in at 333.95. That actually goes back a month. It's not a new high. Usually every month we make a new high. So that's very good news. And if you look at the core index, started in 1957, very similar, 336.06, a little bit lighter than the historic high of last month. It's nice to break.
This is a really good CPI. We beat on core. We beat on headline. Everything's getting at least a temporary bump right here. We're going to talk about the banks because the banks had earnings. The banks crushed it. I mean, the banks absolutely crushed. JP Morgan had their best recordly quarter profit in history. I mean, so the banks, if the banks are any proxy to how earnings season is going to start, they are in the right direction. Oracle still down 1%, but there's a green candle. Tesla flips green. AppLovin got demolished yesterday. That one trying to flip green. Nebius got a big deal with Reflection this morning. We'll talk about that. Nebius right there, 219. That's up 4%. Micron trying to get back up to 1,000. That's at 5%, 985. Again, I do think there is going to be a semis or a software to semis rotation today just based on some of the headlines. By the way, Kospi last night in South Korea ended up green. It actually was down 3%, and Micron was at like $910. Towards the end of the session, it ended up flipping about 1% green, so that's helping all the memory names and momentum names. There are some stats about what's going on in South Korea, though, that we got to talk about, and it's not necessarily pretty from a leverage and margin perspective. But overall, as long as Kospi stayed strong, that is helping momentum right here. ServiceNow still down a nasty 7% based on IBM. IBM still down 22%. There's that little green candle emerging on the software stocks. I don't know if that's going to be enough to overcome a lot of the damage that IBM caused today. And again, if you're just joining, we'll talk about what happened with IBM. But the actual numbers themselves, Google right there up. I mean, those were good. Those were good. Bitcoin as well, 63.5. So let's get deeper into some of these numbers right here. The index for energy fell about 6% in June after rising 4% in May, 4% in April, and 10% in March. So you had the first monthly decline for energy in about 3 months. The energy index was the largest contributor to all monthly items on the decrease, more than offsetting increases in other indices, including those for shelter and food. The index for all items less food and energy was unchanged in June. Indices that decreased over the month included motor vehicle insurance, communication, apparel, medical care, used cars, and trucks. The indices that increased were personal care, furnishings and operations, recreation, and household items for the month of June, and then 3.5% on the core. So again, the market wanted 3, or the market thought it would be 3.8. We came in at 3.5. On core, the market thought it would be negative 0.1. We came in at negative 0.4. Last month, it was 0.5 positive. So this is a pretty steep reversal. Now, it makes sense given gas prices fell pretty aggressively because oil fell aggressively in the month of June. But the problem is oil is now spiking up based on this Iran stuff. So I think the market's going to have to square off the immediate results of CPI being good, or that data being a little bit backward looking because oil has spiked up. Now, it's not like oil has spiked up that aggressively from June, but the fact that we're pushing 80 based on some of the stuff Trump said last night isn't the best. But overall, this is definitely what all of our portfolios needed today on a ugly week and a half stretch for semis. And now, based on what IBM said for software, yeah, we kind of needed CPI to not be bad. Palantir is down because of IBM. We will talk more about it, but unfortunately, one of the bigger software names had a really bad preliminary Q2 results, and it's taken down all the software names. Palantir, again, that green candle based on CPI is now starting to flip red. ServiceNow, that green candle is now starting to flip red. As you can see right there, that little red was green based on CPI. So really, it's going to be a question of how much the street buys into these results and if it's enough to overcome the narrative that IBM set this morning. Micron right there, 5% up. So you got the memory names doing okay. Marvell, that's up 6%. BlackBerry's up. Nokia's up. SMCI is up. Poet's up. Lumentum up 6%. AAOI, that's up. AXTI, that's up 8%. A lot of these semi names that were getting crushed. Where's NVIDIA? NVIDIA's up almost 2%. That continues to be green. Broadcom also getting some love right there, up 3%. So the software names not liking it. The semi names continuing to hold on to their momentum. And that seems like it might be the story for how this is going to play out today. Why is Reddit down in the IBM news? Reddit is seen as a software name, and as a result, Reddit gets hit. Now, Warsh is going to be testifying in about an hour and a half as well. So we'll get some more coverage on what Warsh says, which also might cause some volatility in the market. Let's get a little bit more coverage here, and then we will get into some more of these headlines.
Has a, quote, resolute commitment to restoring price stability. And with the correct policy, he says the inflation surge of the last 5 years will be a thing of the past. Underlying inflation over the long term is determined, he says, largely by monetary policy. Economic activity is expanding at a solid pace. The housing sector is lagging. Consumption growth has been moderate. Manufacturing output has moved up steadily. He talks about the rapid pace of business investment appearing to accelerate, and the Fed is monitoring the impact of AI on inflation as well as on the labor market. Labor market, he says, appears to be broadly stable. Productivity growth is strong. He sees few layoffs, solid growth in nominal wages, and he talks about these task forces he's put together. Says, quote, we are starting a new chapter at the Federal Reserve. So, Joe, he doesn't lean against Waller. What Waller said, he doesn't promote it. Just basically elevates inflation to the main thing that he's talking about at the beginning of his speech, and doesn't talk about having too much concern about the jobs or the employment side of the.
So that's what Warsh's initial statement was. They always release a statement a couple hours before they testify. So we're going to see what Warsh ends up saying at 10 a.m. But a lot of his opening statement will be very similar to what you just heard right there. Basically, price stability is our number one goal. Inflation. Kevin Warsh says this committee has no tolerance for elevated inflation, which could be interpreted as a hawkish stance because, that means they might be more prone to hike. But with this new CPI print, and if oil continues to kind of just relax, maybe that mentality is not leading to a cut, but it's definitely not leading to a hike, which is the most important thing. ServiceNow still down 8%, NVIDIA up 1.6%, Broadcom up 2%, SPY did get a pump to 754, now it's 751. So the street, once again, not fully buying into the CPI hype based on some of the broader volatility. Palantir, that green candle completely going away, flipping red, and then ServiceNow and IBM also losing a majority of their green candle. Hunter says, I'm making you say hi to my girlfriend and happy birthday. Hello to Hunter's girlfriend and happy birthday. I don't know Hunter, but I imagine he is an amazing boyfriend because he is watching the market open every morning. So happy birthday to you. All right, so let's get into some of the other headlines we got this morning, and then we'll get a bit deeper into what we've got going on. Again, the reason we are here early is because we had CPI, and CPI did what it needed to do, aka not be aggressive, and hopefully that can continue to be the case. All right, so let's start with some of the AI headlines, and then we'll keep going. We should be happy, right? I mean, if we had a bad CPI with this IBM news and the semiconductor volatility, it wouldn't have been fun. By the way, Chamath is hosting Squawk Box. That was a surprise. So Chamath right now is analyzing the inflation numbers in a suit and tie. So there you go. We'll see whatever analysis he has to say later. All right. So AI headlines. Nebius, they are not doing too bad right here. So let's pull up this headline on Nebisa. So two things we have. Number one, they're selling $1 billion in AI capacity to startup Reflection. Cloud provider Nebius agreed to sell more than $1 billion worth of computing power to Reflection AI, a developer of AI models that was launched by two former DeepMind Google engineers. The agreement runs through 2029 and gives Reflection access to NVIDIA's GB300 AI chips, the company said in a statement on Tuesday. The fact that Nebius is consistently generating deals is why I think they are probably the best neocloud that is out there. I mean, you've got some of these neoclouds that it's been months. It's been almost a year since they've had another deal, and Nebius is doing one almost every month, if not every other month. So quite incredible. $1 billion is not crazy. It's not like a $25 billion meta deal, but the fact is they are getting into more customers. They're getting into more startups, so they're not being as concentrated to the hyperscalers. And as a result of that, I think it's nice to see that Nebius is getting this momentum. On top of that, you've got some leaked reports right here that Nebius is starting to get its first data center built in India. Just 2 hours ago, the company posted 2 on-site job openings in Hyderabad, both related to new data center launches. the argument here is that from the Economic Times, they've reported that India-based data center companies were looking to attract neocloud firms to the country. Obviously, India has 1.3 billion people. You're going to need a lot of hardware infrastructure to be able to make sure that the demand for compute in India, based on all the enterprises and consumers there, will be met. And the hyperscalers are probably not going to be the only ones to be able to do that. So I think that's why Nebius is getting the nod right here in the pre-market. I'm not sure if that is going to be able to sustain itself, because a lot of the semis have, pumped up pre-market and then got dumped. Nebius is basically where it's at, where it was at yesterday in the pre-market at 218. So we got to see if this has some legs behind it, but this is a good deal. Again, not like a $20-30 billion deal, but it's enough of a deal that I think reminds the street, hey, this is a neocloud that is very diverse, and they're having a lot of different clients to help their approach to diversifying their revenue streams. On top of that, CleanSpark also got a deal, $6.5 billion over 20 years. Again, a lot of these companies, if you can get a deal, that's really all that matters in order to get re-rated. And CleanSpark right here signed a 20-year, $6.6 billion data center lease with an undisclosed high investment grade global tech company for its Sandersville, Georgia campus. It covers 175 megawatts of critical IT load. Contractor revenue could rise to $11.6 billion if extension options are exercised. And the tenant also signed a letter of intent and exclusivity agreement for CleanSpark's 885 megawatt Texas portfolio. The good news about this is, whether you're invested in CleanSpark or not, if you are invested, it's a really good day because it's up 20%. But if you're not and you're just tracking the broader data center ecosystem, I mean, this is really good, right? Because you're seeing some of these smaller players like a CleanSpark, like a Marathon, which had a deal last week, that are getting deals. And the more deals that they get, the more it continues to prove the argument. Meta increased their forecast for their Louisiana data center from $50 billion to $250 billion over the next 10 years, based on the investment that they're making, another 1,000 jobs that they'll be creating there. And it goes to show that, like, the CapEx spend continues to be there, and it's not necessarily going away. And as long as it's not going away, I think at least, that's at least what keeps the argument around the data center thesis being strong. We don't have any deal with Iran. We don't have any deal with Keel. The main two deals this morning was CleanSpark and Nebius. So, hopefully the rest of them start to see some more deals. But Nebius right there up 4%, CleanSpark up 19%. Again, CleanSpark really needed this because they haven't had much the whole year. Nebius, this was just good for sentiment, given the stock has been taking a hit. The other ones have not really announced anything. CoreWeave, that's up about 2.6%. Iren is up about 2.92% as well. SpaceX, is that green? SpaceX took an ugly hit yesterday, down about 5%, 140 right here. So that's getting a little bit of love. And then Rocket Lab up 3%. That's also getting some benefit from the space trade. Robinhood 111. Robinhood was 108 last night. So Robinhood, that CPI report helping get bounce up as well. 111.32 right there. But a lot of these names still getting hit. Okay, so let's talk about software, as IGV is down 4% today. What happened? We talked about it a little bit earlier in the morning, but unfortunately, what happened is IBM put out preliminary Q2 results. So IBM said that they saw most of their spend from clients shifting from software to semiconductor CapEx in the last 90 days, which is why they missed their numbers. Quote from the CEO: "In the last few weeks of June, we saw clients shift their quarterly CapEx spend towards servers, storage, and memory purchases to secure supply-constrained infrastructure ahead of expected price increases." He also said clients were distracted by rapidly evolving industry-wide security concerns, and that IBM did not participate in the magnitude of CapEx reprioritization. I do not think that means software is dead, but unfortunately that means that one of the biggest software companies on the planet, this was a $270 billion company before they lost $65 billion in the pre-market. When they come out and say, hey, our clients are showing us or are telling us that software spend is going to semiconductor spend, and that they have to reprioritize the money they were going to spend for software at IBM to infrastructure like data centers, memory, etc., then that's the reason why we're missing our numbers. I think this is a really silly reason to take down Palantir and Zeta and Figma and Reddit and Shopify and all those names that are getting hit pretty hard in the pre-market, because unless Shopify and Zeta and Reddit and Palantir come out, in the next couple of weeks and say, yeah, clients are buying NVIDIA chips and AMD chips and Intel chips and memory, and they're not able to spend on software, then this is a nothing burger. This is an absolute nothing burger. But unfortunately, that is what's happening in the pre-market, which is why I think today is going to be a good day for long-term shopping if you have any interest in the software names. I mean, like, I actually wouldn't mind this thing getting really ugly, because if this is the reason, if this is the real reason the street wants to project that these companies should be down 10, 15% because they're going to miss earnings by 10, 15% over the next 90 days, then be my guest, because it's hard. I mean, look, I'll say if I'm wrong, if we get all these earnings that come out and all these companies are like, yeah, we can't make our numbers because people are buying too much Micron inventory. But I feel like this is an IBM specific thing where their software is important and valuable. This is a big company, but it's not valuable enough, or it's not creating enough transformational change in the age of AI. Some of the similar problems we've been seeing around things like a Salesforce, where if customers really think they can live without your software, that's your fault. Right? That's not a software sector problem. It could turn into a software sector problem if we see multiple other companies having that same logic behind why they're not beating on earnings. I just heavily doubt that's going to happen. I really do. Otherwise, all of them would be releasing preliminary Q2 results to kind of warn the market. But IBM is doing it for a reason. And it's because, their software in particular has just not been valuable enough to withstand the CapEx reallocation. And if the other companies say that, then they're going to go down pretty hard. But I just don't think that's necessarily going to happen. Meta right there, that's also down about 1.2%. The problem is they bucket all software together 100%. And that's why I think today might actually be a really decent opportunity if we get some juicy dips. Oracle right there. This is also a software company and a data center company. So that's getting hit on both sides, down about 1%. It was actually down below 130 in the pre-market. So having said that, what's up today? Corning, 7%. TSM, 3%. SK Hynix, up 8%. SMH, the semis, are up 4%. So the software to semis rotation, which was the opposite yesterday, seems like it's happening again in the pre-market. Bitcoin right there trying to get to 64. And if that's the case, then if you've got a lot of semis loaded up in your portfolio, you're probably going to see those flip green. If you've got a lot of software, you're going to see that flip red. And the question is just going to be what opportunities do you want to take advantage of. Now, Warsh is speaking at 10. And although Warsh's statements have already come out, which let me just read them again. He said two main quotes. Number one, the Fed has no tolerance for persistently high inflation. Number two, if we get policy right, and we will, the inflation surge of the last 5 years will be a thing of the past. He's basically going to have that type of mentality when he speaks to Congress in the next hour. And so I think the market might be a little scared of what he's going to say, just based on the general kind of volatility of a Fed chair speaking. But if he's not going to say anything too different than what he's already put out in his statement, or that the market already knows for him to, believe, then I don't think the Warsh statements should be a concern heading into this market open. But nonetheless, Fed chair speaking in front of Congress, that always is going to have the market's attention. We're going to see how this ends up playing out. Let me check the probabilities for rate hikes. So again, if you're just joining, CPI came in way better than expected. 3.5 versus 3.8 on core. We actually were negative 0.4 versus positive +1 or plus 0.1. So it actually was a really big beat. We have a 83% chance of doing nothing on July 29th. We have a 17% chance of hiking. In September, we have a 9% chance of hiking, and in October it's about 3%. So it still seems like the hike is being priced out. SoFi in the pre-markets, how's that doing? SoFi, that's up a little bit right there, about 1%. But the cut is definitely not happening based on these CPI numbers, unfortunately. Oh, the IBM is in the Dow, right? Well, that might take the Dow Jones down heavily today. Is the IBM in the Dow Jones? I'm pretty sure. Is the IBM in the Dow Jones? Yes. Okay. So the Dow might end up taking a pretty ugly hit today. As we'll see, one of its larger components right here, down about 22%. We'll see if the market ends up thinking about this. Wow. A lot of you guys are questioning why I started early today. So many comments. Amit, why are you early? Why are you early? Maybe you guys are mad because you're late today. Maybe you guys are mad because you are late today. In fact, I'm actually mad at you that you didn't know we had CPI today, which is why I'm early. So you need to get your shit together and remember that on the days we have CPI, yes, I'm going to be live early. And second of all, how does it feel? How does it feel to be late? Because you know what? That's how I feel every day. Except I'm not guilty about it. You guys might be feeling a bit more. There's like so many comments amid. And why are you early? Why are you early? Am I late to the stream? Yes, you are late to the stream because you were not a studious enough investor to remember that we had CPI. I say this as someone who forgot we had CPI last time and was literally 2 minutes. Came in at 8:28 before 8:30. The numbers came out. I think this was like back in May, because I legit forgot we had CPI. But you were not studious enough to know we had CPI, and that is why you are here late today. But that's why I was live. Okay, so that was what we had with Oracle. Let me see if I can get a little bit more coverage on Oracle, and then I'm going to get into the bank earnings, because the banks absolutely crushed it. And the banks were very important. Hollis says, we can't control you being early. You control you being late. That's true. That is true. But still, so many people forgot we had CPI. Okay, do I have any of that Oracle coverage? Let me see right here. This news broke. I actually saw this news as soon as it broke, and it fell to 234. And I was just like, goodness, this is a pretty, I didn't know it would go down to almost 219. And now it's, sitting here at around 220. By the way, Buffett gave away a ton of his stock today. Sorry, IBM, not Oracle. Even though the way Oracle's fell, it makes you kind of think it could be Oracle. Okay, here is the IBM coverage. Let me see if they are talking about it here, and then we'll get into some of the bank stuff. Yeah, I meant IBM, not Oracle. Sorry.
The math doesn't make sense of what's happening. Or you look at the Figma story, for example, of them going into different businesses.
Those are really concerning. I mean, look, let's be clear. There are 3 leaders of lab companies who have been in the spotlight for 20 years. Elon, you've seen every facet of his personality, and you can judge over 20 years of behavior. Sundar and Demis, 20 years. Zuck, 20 years. And I think those folks have shown that they basically run a relatively straightforward, well-understood business, right? There aren't any rug-pulling situations. Maybe Facebook had some in the past. I think
it's had a big run-up, which it hasn't had in a while, but it is down today. There is a letter from the CEO to investors, and the company sees second quarter revenue 17.2 billion, 70.
And that's the scare that people have had, and that's one of the reasons why software in general hasn't done so well. Software at 5%. I mean, oh my goodness, it was supposed to be at least double digits, maybe even into the teens, and so that's very disappointing.
Do you need to go somewhere and have a drink or cry or something, or you want to continue along with the?
Needs to buy some tokens.
Yeah, worried about you, Steph. Okay, thankfully, let's go back to the banks end where you can talk about all the good things happening.
Yeah.
Yeah, so this was obviously bad. You can tell right there. It was supposed to be double digits on the revenue growth. It ends up coming at 5%. The consulting revenue was flat, right? We already saw what happened with Accenture when they missed estimates, and the CEO went on TV, tried to explain it, and there was really no explanation. Then infrastructure revenue was actually down 7% year over year. So overall, IBM, this is a report that does deserve to be down today. I don't know if it deserves to be down 25%. I just don't think down 22% right here pre-market. I don't think it deserves to take all the other software names down, but I can understand why, because if the Kospi has a bad day, Micron and all the memory names go down. If a big software company has a bad day, then all the software names go down, and that's just the nature of how this is playing out right here. And that's why Palantir's down. That's why Zeta's down. That's why Reddit down. That is the reason for why all these names are down. CleanSpark did get a $6.6 billion deal. That's why that's up 19%. And Nebius got a $1 billion deal with Reflection. That's why that stock is up 4%. 4% as well. Okay, so the banks. How did the banks do? Well, the banks pretty much crushed it, which to me is pretty exciting for the overall state of where the earnings cycle is going through. We have a lot of earnings coming up this week. ASML and Netflix are going to be really important. So Citi crushed it. Revenue up 14% year over year, 24 billion versus 23.7 billion. That is a beat. EPS 315 versus $1.96. That is also, or versus $2.75. That is a beat. So you had Citi that had a massive beat. You had Bank of America 7% beat on EPS, 121 versus 113, 3% beat on revenue, 31.5 versus 30 billion. Revenue's up 19% year over year. EPS is up 36% year over year. There are tech companies that can't grow EPS 36% and revenue 19%, like an IBM that just grew 5%. And so the banks are doing amazing. Then look at JP Morgan. EPS is up 47% year over year. They beat by 33%, 770 versus 580. Revenue's up 28% year over year, 57 billion versus 51. They beat by $6 billion. This is a bank. This is not a tech company. This is a bank. I mean, the trading revenues, the investment banking revenues, all of these are just absolutely demolishing it. And they raised their dividend and they're buying back more stock because they beat the stress test that the Fed had a couple weeks ago. Wells Fargo, $2 versus 172. That's a 16% beat on EPS. 4% beat on revenue, 22.6 versus 21.85 billion. EPS is up 25% year over year. Revenue is up 9% year over year. So, I mean, it's too early to tell if the banks are a signal that all the earnings are going to be amazing, but you can't really have a good earnings cycle without the banks participating and showing that they can put up the numbers that they need to put up in a meaningful way. Goldman Sachs, they beat by 44%, $20.98 versus $14.54. I mean, either the street completely modeled these numbers wrong, or the street was actually really like coherent with their earnings estimates, but these companies just had such amazing quarters that it was enough to overcome the mediocre expectations that in hindsight that it looks like the street had. 16.4 billion was expected in revenue. They came in at 20.3 billion. That's a beat by 24%. Revenue up 40% year over year for Goldman Sachs. 40%. Again, there's like a handful of tech companies that are actually growing at 40%, and they have way better business models from a gross margin perspective than the banks. And EPS was up 92% year over year. Unfortunately, the banks are not really getting a lot of that love in the pre-market. JP Morgan is down 2%. Now, a lot of these banks have done really good over the past couple of years. So, you know, it's not like a lot of this hasn't been priced in. Bank of America basically flat in the pre-market, which is a little concerning if I say so myself. I mean, Goldman Sachs at least is getting some love. Citi, I think, was up about 2%. But if the banks can't pump on that, no, Citi's actually down. If the banks can't pump on what seems to be the best numbers that we've seen in the past 5 years for the banks, it makes you wonder how much of it is baked in, how much of the street is excited that, or not excited that these numbers were supposed to happen and then these numbers ended up happening. Now, obviously, I think this would be a good signal for SoFi. Because if the regular banks are crushing it, then SoFi should have no problem crushing it. SoFi is also going to be growing faster than many of these banks. But once again, the rate cut narrative is going to be, I think, the key determining factor for a lot of at least the potential earnings trajectory of the banks. The one good thing for SoFi, though, is that, you know, it's seen as a tech company, seen as a bank, but financials are now where the rotation is happening to, at least to an extent. And the financials really have barely participated in this bull market. I mean, XLF, which is the financial index, is up 2% this year. So if SoFi is seen as a bank, which, you know, in many people's eyes is like bad because it's not seen as a tech company. Well, if the banks are getting all the love, then maybe SoFi actually starts to get some love because
back to another episode of the Market Open. We are live.
Goldman Sachs posted 7.42 billion of stock trading revenue. The equities result jumped 72% a year earlier, driven both by financing and taking profits in arranging bets. Meaning, Goldman Sachs made the most ever revenue they ever did in the history of the company for trading stocks. Because obviously Goldman Sachs is a prime brokerage and they make a ton of money from trading institutional capital, which obviously means Robinhood is going to have a really good quarter in terms of trading revenues. I mean, all the banks have put up really good numbers when it comes to trading revenues, but I mean, I just don't see how we can be super bearish going into Q2 earnings when the banks are putting up these types of numbers, even if their stocks are not reflecting it, which theoretically could be bearish because at the end of the day, if the stocks can't pump on this, then, you know, what is it going to take for them to pump? Or it just means that the expectations are baked in. I mean, we could have an earnings where by the end of the next 45 days, the S&P 500 is at 750. Right now it's at 751, which would still be a win in my opinion, because as long as we just, you know, we don't collapse down to the 7,000s like a lot of people are predicting, then that's good. That means at least everything's priced in and we've lived up to the expectations. But to supersede the expectations, even if individual companies are doing so, might not be enough to, you know, take the S&P to that next leg, which would be around 7,700. Is this good for BlackRock? This is really good for BlackRock, really good for Blackstone. It should be good for the private equity firms, even if they have some of their own issues when it comes to private credit. We're going to get a lot of those earnings Tomorrow we get BlackRock, Morgan Stanley, and Blackstone. So, I mean, I just, this should be really good for the regional banks, KRE, TFC, Zions Bank, all those. KRE right there up about 0.4%. If we wanted the banks to do well, then I think we should see the banks, or if we wanted the stock market to do well for earnings, at least we've got the banks proving that they have the ability to end up doing well. So not bad for the banks. Did you hear about the Nebius deal today? Yes, there's two things for Nebius. A, they're probably opening up a data center in India, and B, they got a $1 billion deal with Reflection. That's why that stock is up. Sharon AI was part of NVIDIA's press release 2 weeks ago when they announced their new NeoCloud partnership. That stock is up 7%. There is not a deal, from my understanding, with Sharon and Anthropic, but it's rumored that there is a deal. This is a Leopold position. So, based on what people have seen, it feels likely that there will be a deal with Anthropic and Sharon in Australia, but no one fully knows yet as it's not public. But I think that's why the stock is getting some love right there. That's up 6.9%. Yeah, it's been rumored for months, and Leopold does own it. Now, Leopold owns IREN as well. So, by the way, Leopold's other position that I know a lot of you guys like is T1 Energy. That's up 3.3%. The reason that stock is up 3.31% is actually quite interesting. So, this is a solar play, and what's happening with solar is pretty interesting. Google this morning agreed to buy 100% of the initial output from an Arkansas Steel River solar and battery project. The project will deliver 1.6 gigawatts of solar and 2 gigawatts of battery storage by 2029. It's 100% domestically sourced solar panels to be supplied by First Solar, and the batteries by LG Phoenix. First Solar actually popped about 7% on this news in the pre-market. Now the stock's up 3%, but it did hit that 230 range right now at 227. So I think anyone who feels there is a solar revolution coming in the data center space, because quite frankly, we don't have enough energy and nuclear is not really doing anything right now, to build out the infrastructure needed for solar to be a real thing when it comes to energy infrastructure. I think you're on the right track. I think it makes sense. Like, you've seen headline after headline over the past couple of weeks, and I think that's probably why Leopold has the amount of shares that he has in T1, because his argument is, okay, this is a small company that's going to make big headways when it comes to solar. But, seeing that thesis play out obviously takes a little bit of risk taking, because it's not a guaranteed thing, and this administration isn't really the biggest fan of solar in general. So I think the political headwinds on solar shouldn't stop the broader CapEx revolution that solar might play a massive role in. But, nonetheless, it's part of the reason why Enphase got smacked from 340 to 43 over the past 2 years, as soon as Trump came out and became president, and drill baby drill became the kind of core thesis here. So we're going to see, again, for the past week and a half, the semiconductor dip has not been bought. Pre-markets, it's at least starting to be bought a little bit. I know some people are worried that this could be a head fake going into the market open, because we've seen this happen a couple times. We are going to find out in the next 26 minutes if the Microns of the world, the Nebiuses of the world, the Broadcoms of the world, if they can sustain this, or if it ends up being a head fake. I mean, it feels like there's momentum. It feels like there should be a little bit of rotation back to the semis, given they've taken such a big beating over the past month. And the IBM news is only pouring fuel on the fire in terms of the logic for why being long semis and short software makes sense. So everything, and then you had a really good CPI report. So everything, the semi, and then Kospi was up 1% yesterday. So everything you need for the semis to have a really good day, I feel like, is in place. And then the banks crushed it. If the semis still have an ugly day, then there's something deeper going on with the semis, because today is one of those days where literally everything you'd ask for. I mean, multiple data center deals announced today between Nebius, CleanSpark. I mean, you've got just all these different things that prove the semiconductor thesis, the broader AI trade thesis, to be intact. So if the semis end up going red today, it would be quite surprising based on what's going on. Qualcomm right here, that should be up pre-market. Yeah, 190. That was at 183 yesterday. So all of them getting some love right here. Again, if you are just joining, the reason that first of all, if you're just joining, you're late to the stream. Okay, let me just say that. You know what? I feel like that should be a thing. I feel like if everyone's not here at 8:45, that should be a thing. But why didn't I think of this? But that should be a thing. If literally everyone who watches the stream is not here at 8:45, you're late. Oh my, I think I just unlocked a new revelation today. I mean, you're late. Why should I get the blame for being late 2 minutes? If you show up at 9:29, excuse me, sir, you're an hour late. Like what? Like, I think I just figured out a new talking point. I like this. I mean, for all the shit I get for being a couple minutes late, if you are just joining, and I think you should think very seriously about what it means to be late. If you're just joining, IBM had a really, really crappy Q2 results. That is why the software names are taking a hit. And unfortunately, that's why they're down. You are a host and we are guests still. Like, if you're a guest at a house party, is it polite to be late? Does that yeah, the hosts definitely shouldn't be late if they're hosting the party. But if you're a guest, like, shouldn't be fashionably late, right? That still, I don't know, it doesn't make sense.
Also said spending on servers, storage, and memory, or is this longer term in nature and some real reflection of a lack of execution in terms of their sales force?
Well, I do think that, remember, this is a company that has a mainframe, okay, and the mainframe software stack was disappointing. The mainframe sales were disappointing. I mean, the revenue, it looks like it's almost in line. Street looking for 17.86 billion.
That'd be about 1%.
Yeah, but it's that software revenue, which is people looking people looking for 10%. It came in at 5%. Infrastructure revenue down 7%. That's their mainframe, and so I think my answer is it may not come back.
Really?
Yeah.
Then if that's the case, is a 24% decline in the stock price warranted?
Yeah, I think it is. I mean, this is hard. A lot of people know Arvind's done a lot of things very forward-looking, but I think there's this is a fundamental shift of this is buying compute. This is what we talk about. This is NVIDIA, and this is SK Hynix. And
I think Kramer's being too bearish here. I think he's being too bearish. I get, like, IBM should be down, but the reason IBM should be down is because IBM's business, which again, for all those asking why are the software names down, the reason it's down is because the IBM CEO came out this morning and he said, based on our preliminary Q2 results, the reason we didn't do that well is because customers are spending more on capital expenditures for the semiconductor stack versus software. If every other software CEO comes out and says this, then yes, we should have a massive 30% sell-off across IGV. If just the IBM dude is saying it, that's an IGM problem or IBM problem, right? Like, I don't think that's crazy to say that if your company is not the one that's getting the allocation of spend, then that's your fault, because your software is obviously not valuable enough for them to be spending. But, it's a cutthroat business right now when it comes to software, based on the sentiment around software and based on all the different ways that the foundation models are trying to disintermediate the software applications, which, again, I think that broader thesis doesn't make sense. I think you need that application layer still. But at its core, if they're not paying that much for IBM, it's like, it's like a lot of companies back in 2022 that blamed Russia, Ukraine. Like, to an extent, you could blame it. If you're an oil company, you could definitely, based on like raw supply, but Meta couldn't really blame Russia, Ukraine. The reason Meta's earnings were horrible in 2022 is because they overhired in 2021, not because advertising sales were down because of what happened in Russia and Ukraine. Like, that could have a marginal impact. That's not, meaningfully going to destroy the entire global economy, right? It's not like 2008. It's not COVID. So I think it was a scapegoat. And I think the software names are being misappropriately judged on that. And I think there's going to be some really good dip buys today if they continue to get hit. In terms of the semi names, KeyBank raised all their targets. AMD, 530 to 725. ARM, 300 to 430. Marvell, 385 to 400. Micron, 1600 to 750. And then NVIDIA, 310 to 330. So you got all of the semiconductor hardware names, continuing to get some love as the software names are going down right here. So again, the big banks absolutely crushed. JP Morgan's profit were up 41% in the second quarter. Bank of America up 25%. Goldman Sachs up 43%. Like, all the banks did what they needed to do. Kospi did what it needed to do last night to make sure that the software names, or to make sure that the memory names were on point. It's just this IBM result. And then CPI was great. It's just this IBM result was really ugly. And it's hurting the software stocks. The thing I'm most interested in today is, again, after Kevin Warsh speaks or during Kevin Warsh's speech, what's going to happen with how the market interprets the semi-trade, right? Like, is the stress of inflation or the stress of the labor market going to have an impact on how the market thinks of CapEx? Is going to have an impact on how the market thinks of broader implications for capital expenditure, the memoryflation type of story that, you know, we're seeing right here in terms of how that's causing inflation. Like, we have to really think of the market's interpretation of Kevin Warsh. But if it's not that bad, then I think this should be a relatively decent month. This is what Trump had to say yesterday about Iran. The U.S. Central Command did start attacking Iran last night, which is why oil's at 80. And Trump said that they would start attacking late last night.
Well, I think they're a little cuckoo. I think they all are. We knocked out the first regime. We then knocked out the second regime. We then took out about 25% of this regime. And they're wired a little bit differently. We had a deal yesterday. It was like going to be 100%. And then all of a sudden they got a phone call and they all ran out of the room. These people are crazy. We had a deal where we won everything. And they basically break the deals. You know, they make deals, and to them, deals are made to be broken. They are extremely unreliable people. And frankly, if they ever had a nuclear weapon, they'd use it within one day. Well, I think they're a little cuckoo. I think they all are.
As a result of Trump's comments last night, the U.S. Central Command started a third round of strikes at around 6 p.m. last night. I think it was actually around 5:45 last night. And, you know, we are back to attacking Iran. Now, the big news from yesterday that some people might have missed is that Trump put a 20% cargo tariff effectively on any ships that go through the Hormuz Strait, as the USA will be from this point known as the Guardian of the Hormuz Strait. Axios reported that there have been no inside White House officials that have confirmed that this 20% is real. So I think right now the market's interpreting this as, like, you know, until Bessent or Lutnick actually files the paperwork to legitimately say that any ship passing through the U.S. blockade, which is now going to, you know, be inserting the naval blockade near the Strait of Hormuz, will pay a 20% fee, then it's not official. So I think the market's not really interpreting this as inflationary yet. The reason oil is up is simply because of the heightened attacks, which in general is going to create more escalation. Oil right there, almost 81 in the pre-market. So we went from 67 to 81 in the past 7 days. But that 20% cargo tariff, yeah, that might be a big deal. But we're going to see what ends up happening. All right, some other updates from yesterday. First of all, your boy Alexander Wang from Meta, he's very excited about the stock price. So our girl Molly, I told her, I showed her clip on the stream. So then she clipped me showing her clip on the stream, the clip where she interviewed the Cerebra CEO, who basically admitted that Alex Karp is right about the open source models. And her caption was, Meta just price mogged OpenAI and Anthropic with MuseSpark 1.1. In the 4-minute video, I ended up talking about Meta getting those prices to go down. And then Alexander Wang, the head of AI at Meta, quote tweeted that and said price mogging. This is the 5th quote tweet he has done in the past 72 hours that had to do with Meta stock price, which to me is kind of bullish because I think he's happy the stock is going up. I think he was pretty upset that the stock was taking a hit over the past month because, I mean, at the end of the day, he is responsible for Meta's AI strategy. Like, Zuckerberg gave him $15 billion to make sure they don't screw up AI. So, you know, the stock price going down based on their AI initiatives was a reflection of him. And so I think he's trying to pump the stock. The problem is, I also think he's trying to pump the stock because they're definitely, in my opinion, going to dilute with new equity. So as excited as I am that the Meta executives are so openly talking about the stock, which at least shows that they kind of care about shareholder return because they haven't for the past year. I also think they want the stock to get up to 750, and they're going to do exactly what Google did when it came to 85 billion of equity dilution. So I think as Meta shareholders, we have to be ready for that. The stock's going to be down 10% the day they do that. I think it will easily recover just like Google did. But you just can't imagine Meta's going to be spending $230 billion of CapEx, which is now what all the sell side is estimating. They're all estimating $230 billion of CapEx going into 2027, you know, 220 to 240 around that range. And they got to get that money from somewhere. And it's not just going to come from free cash flow. They're going to have to raise capital either in the equity markets or in the debt markets. And I would imagine, based on how successfully Google did it, they're probably going to do that in the equity market. So we're going to see what ends up happening. Oh, France and Spain are fighting today. Not fighting, but like competing. Yeah, I have no opinion on this. I have no idea who's going to win this. All I know is France has Mbappe. I don't know anyone on the Spain team, but it's at 3 p.m. Okay, so we will probably get the final result of that during Technical Tuesday. And we will see what happens there. Amid, I had to listen to you at 2x speed, and now my ears are bleeding. You know, that is the price you have to pay for someone who speaks fast and gets through a lot of stuff quickly. We did interview Ryan Cohen yesterday. I teased it on the market close. I said there's a CEO interview coming out, and you guys will be surprised by it. A lot of you were surprised by it. And so thank you to everyone who took the time to watch the interview. I do not have a position in GameStop stock. Not necessarily interested in buying GameStop stock. I think Cohen did make a really compelling case, though, for why the company should be able to buy eBay. I also think he made a very compelling case for why the financials of the business have fundamentally, I mean, when we mean fundamentally changed from the dying business that GameStop was back in 2020. The company had their most net income on a GAAP basis ever in the history of being a public company in 2025. So, and that has only increased substantially. So you know, GameStop earnings are coming up. I imagine if they can put up some good results, the stock can do well. The problem is they want to buy eBay, and they're going to do half cash, half stock, which means there's going to be dilution involved. So I think the overhang on the stock for those that are interested in the stock is that eBay acquisition. Although I think Ryan made a hell of an argument for what he could do with eBay, and you know why they could manage it in a more cohesive way. So that's what we had with GameStop yesterday. eBay right there is down about 0.16%. Thoughts on entering IBM today? You know, this one's interesting, dude. Like, I think 30% or 22% is a little aggressive. But when you enter into a name after it's had a really big sell-off, there's two perspectives I have. Number one, do you think the sell-off is overly aggressive and there will be a bounce, and that bounce will be the opportunity for you to get the lows on the, you know, the core pain that the initial sell-off took? Or is that bounce not only justified, is that downfall not only justified, but is the future quarter going to change from where the price is right now? So IBM at 227, down 20%. My gut feeling is like that's a little bit too much for a company that still is obviously producing tons of free cash flow, revenues, et cetera, even if it's not growing as much. But if things aren't going to change in the next 90 days, like if IBM doesn't get their shit together, then I think that's what the street's pricing in right here. They're not really pricing in this quarter's miss. They're saying, okay, the reason why they missed on this quarter, which for those that are just joining, was because most of the software spend, according to the IBM CEO, that was supposed to happen for the company this year, is going to CapEx and going to semiconductors. If that doesn't change in the next 90 days, then this is just going to have another horrible result, which is exactly what happened with Snapchat back in 2023 when they put out preliminary guidance and it was bad. The next 7 quarters ended up being really bad because nothing changed from the fundamental structural flaw with the business. So I don't know, dude. I don't know if IBM's, I've never done fundamental due diligence on IBM. I think there's a lot better software names that have not cited that the freaking CapEx tailwind for semis has become a fundamental headwind for their core businesses. Like, again, if Figma comes out tomorrow and says, yeah, companies aren't paying for design software because they're spending money on Micron chips, like, then we have an issue. If Palantir says that, we're gonna have an issue, but it sounds more like an excuse than a real problem. The problem is the IBM dude is affirming what all the software bears have been saying all year. Like, this quarter literally makes the argument for why you should be bearish on software so clear. I just don't think you can universalize that to Shopify and Reddit and Netflix and Palantir and ServiceNow and all those other companies. So I think the dip is too aggressive, but then again, these algos have been known to take the software names down pretty badly throughout the entire year. Okay, so those are some of the main headlines. ASML earnings we do have tomorrow. Again, CPI came in way better than expected, and the market liked it, which is why we got that at least initial bump from CPI. Now the question is going to be, can that CPI bump actually stick, or is it going to get punished based on what Kevin Warsh says once he starts to testify? The 10 years down a little bit, but it's still at 4.79. So CPI at least got that to come down a bit, but still at 4.6. Amit will brag about being early today for the next 3 months. I'm not going to brag about being early. I was only early today because of CPI. I'm not going to be early every day. But I can guarantee a bunch of you guys will be late every day. I can guarantee not everyone will be here at 8:45. And I don't know. I just think I think there's a little bit of a table turning here now that I realized that there's a lot of people that are actually late every day. My 2 minutes doesn't compare to some people's 50 minutes at this point. Oh, I forgot the government did invest $10 billion in IBM. You know, part of the reason IBM might be a dip buy, just spin this off the top of my head, is the quantum play. The government put a ton of money. I mean, Trump was literally with Arvind Krishnas, the CEO, in the White House like 2 weeks ago, right? So that's true. I forgot. I don't know what the U.S. government's average price is on IBM, but they invested in them because of quantum. Maybe quantum is what takes them back, and that would be a way that the government gets some of their money back right here, just on the quantum thesis in and of itself. Bitcoin right there above 64,000. All right, let's talk about Korea because we got some new data from the South Korean finance ministry, and it's a little ugly to say the least. It's a little ugly if Kospi continues to go down. So first, retail investors in South Korea are buying the dip. Foreign investors that invest in South Korea are selling the rip. Retail margin calls are soaring. They hit 5% last Friday. Retail brokerage deposits in South Korea plunged by 30 trillion won, the South Korean won, to the lowest level since February 20th. So as you can see right there on this chart, foreign investors are in the red, and then retail investors are in the gray. This is retail Korean investors, not retail investors in general. Retail Korean investors are buying the dip aggressively, and foreign investors are selling the Kospi aggressively. But not only that, as per the South Korean finance ministry, as of July 13th, 1.2 million Korean leverage retail accounts triggered margin calls. Of these margin calls, 320 to 360,000, this is as of yesterday, July 13th, were fully forcibly liquidated by brokers, and some had partial negative balances owed to brokers. So when we talk, and that was just based on a 9% drawdown yesterday because of Kospi. Now, Kospi is in a 30% drawdown from peak to trough, but the 9% drawdown on Sunday night, which was Monday morning, it liquidated 360,000 brokerage accounts, like fully liquidated, to the point where now these accounts are in debt and they actually owe money to some of the brokers. So, I mean, when we say Kospi needs to remain high, I mean, could you imagine if it fell 20%? Or it falls another 10% or falls another 7.8%? And let's say it doesn't recover, right? Because the whole point of margin is that, you know, you can have a drawdown, but as long as the stock recovers, your line of credit recovers and you'll be okay. But the peak to trough on Kospi has, you know, down 30%. We haven't recovered at all on that down 30%. And if we go down another 10%, you know, you're going to need even more momentum to get back to those all-time highs. So I think at this point, it's one of those things where how crazy does the party get? Does Kospi just rally another 30% over the next couple of years or over the next couple of months and, you know, it keeps people afloat? Or does it need to go up a lot over the coming weeks? Because if it doesn't, you're just going to have more and more retail brokerage accounts that haven't been liquidated yet, but are pretty close to getting liquidated. And what does that mean for all the leverage ETFs that are in the system as well? As AMD right here getting some green, 5.28% in the pre-market. So that part's scary. That part's actually really scary because, again, when you look at Kospi, we did some analysis on it yesterday. It's two companies, Samsung and SK Hynix. That's it. That's literally it. It's those two companies that dictate the basis of what's going to happen in South Korea. And, you know, if there's any inkling of fear in those two companies, which is basically what we've seen happen over the past couple of weeks, Kospi's over. There's nothing of value to Kospi besides the memory plays. And obviously memories has had a little bit of a drawdown. So to be honest, for the sake of leverage in South Korea and for the sake of momentum in the United States, you kind of need the memory trades to hold up. And that's why Micron getting above 1,000 today would be really important. It's very close. 1,000 might be a psychological level of resistance, but it is pretty damn close. So when the market opens in 4 minutes, hopefully we see that happen. Samsung did get hit hard after the best operating profit in history for the company. Stock was up 3% yesterday, but In the past month, it's down 21%. And that's why that is taking a hit as well. So I think the thing to look at going into the market open in the next 4 minutes, software names, how juicy does the dip get? You know, do you get Zeta below 20? Do you get Palantir below 120? Or do they kind of stabilize Figma, which was up 12% yesterday, is down 6% today? Does Figma get back down into the low 20s? Do the hyperscalers get any of the rotation that's happening today? Amazon down in the pre-market, Meta down in the pre-market, Google down in the pre-market. They got a little bit of love yesterday, but then they got hit. And then can the software names and the sell-off that has been caused by the IBM, by IBM towards the software names, Google right there fighting for 350, can that lead to a massive rotation into SMH and the semiconductors? And if the semis can't get the love today, and the banks can't get the love today, which the banks, again, they crushed earnings. They just weren't able to get their stocks up that much in the pre-market. And the software names can't get love today, then are we just headed for a bit lower around the S&P? Because if the banks can't put up any of the numbers today, if the semis can't really put up any of the numbers today, if the software names take a hit because of IBM, then maybe it's just going to be a short day, based on the drawdown across all different sectors. The other really big thing is Kevin Warsh at 10 a.m. Like, my gut tells me software is going to go down, semis are going to go up today. That's what's happening in the pre-market. There's a lot of the news narratives that are signaling that's probably going to be how the day plays out. Maybe that's completely wrong, but it wouldn't surprise me if the semis go red, because every day for the past 8 days in the pre-market, semis were up and then they go red. So it wouldn't be crazy to see. And maybe some of the software dip gets bought up. But then Kevin Warsh, does he startle the markets when he speaks at 10 a.m.? And, does that have a deeper issue right here? All right, here we go. We got 2 minutes. We've got 2 minutes. Thank you, everybody, for being here. In the next 2 minutes, we will open up the stock market, all of us across the world here together to stare at these candles going up or down. We have another minute for everyone to make sure that their volume on the device that they are listening to this program on is not muted and should be relatively high, because, even if you're winding down the day, at least for the next hour, you are going to be infiltrated into the world of stocks, and you need to be excited for that. Wow, why did that candle, Amazon, just lost $3 right there? Goodness. Look at that candle, 248 to 245. Google also just got a nasty candle. Ew. Did Meta get that same candle? No, Meta got a green candle. Interesting. All right. In the next 30 seconds, we are going to see how this market interacts with this. Again, CPI was really good, 3.5 versus 3.8. The banks actually crushed it. Nebius, new data center deal. CleanSpark, new data center deal. You've got a lot of the semis having their momentum. Kospi was up 1% last night. The question now is going to be, based on this IBM preliminary Q2 results, is that bad for software? You got Kevin Warsh speaking in 30 minutes. We'll take a listen to him. Trump did attack Iran last night. Oil's above 80. But in the midst of all of that, it seems like the semis might have a chance to get some love. And if they don't, then it'll be the same situation we've had over the past couple of days. Here we go. 9:30, Tuesday, July 14th. The stock market is now open. All right, wake your asses up. Let's get into it. S&P 500 opens flat. We hit 754 pre-market. Now we're at 750. Actually, a pretty ugly red candle right there. 750.37. We lose 750. Then we're kind of back in that range that we were at yesterday at around 748 towards the end of the day. Meta goes red by 1%. IBM, little bit of a bounce. The tiniest of bounces, but IBM down 22%. As that continues to go red. Micron 990. This is the stuff you want to see out of the semis. It actually hit 994. Let's see if that can crack 1,000. AMD, that is up 6.2%. Got a bunch of upgrades this morning. Qualcomm 189, actually going red from the pre-market, but still green on the day. Enphase, that's up 2.7%. T1 Energy, that's up 1.8%. Navisis, getting that $1 billion reflection deal. That is green. Rocket Lab, also getting a nice little bit of green right here, up 3.7%. Nebius right there, 222. SK Hynix is up 11%, almost back to where it was on the IPO listing on Friday. 169.42, that's up 11%. Let's see if we can crack 170. Nokia, that's up 1.7%. SMCI, that's up 1.3%. AAOI, that is up 8%. Are the banks green? Let's take a look at it right here. Again, the banks all had a pretty incredible earnings. So here's the list of the banks. SoFi's up, Nubank's up, Bank of America flat, Wells Fargo actually is red by 3%, which is quite incredible. Citigroup is red by about 1%. JPM is down 1%, and Goldman Sachs is up 5%. So Goldman Sachs is the only bank out of the big ones that reported today that is actually getting some love based on their earnings. Again, all of them crushed it. I feel like all of them should deserve to at least be green today, even if they're not up 5%. But Goldman Sachs getting the most amount of this love. Netflix, are we green? Netflix is red. Netflix kind of trades with the software algo. So if the software stocks go down, Amazon continue to go down, then the software stocks will take down Netflix. IBM, are we holding on? We are not holding on. Below 220. Figma down 8%. Oh, where's Palantir? Are we at least holding 120? We are holding on by a thread right there, 123. Hood is probably going red. Hood is indeed going red, 109.67, as that is down. 217 is the level for IBM that it looks like we're about to break. That was the pre-market low. We touched it for a second, now back to 218. If we lose 217, then it has officially lost all of its pre-market gains from the bottom. Ethereum, how's that doing? ETH is actually doing not too bad, up 5%. Again, a good CPI, really good for the risk on assets like an Ethereum or Bitcoin. Gold should also be up based on that CPI. Gold is indeed up 2%. Silver is up 2.5% as well. CPI 3.5 versus 3.8. Very good CPI. And at least that should be enough for some of these macro assets to do better. SPY is red, or very close to going red, 749. AMD is 570 almost. It hit 574. All-time high is 584. So the upgrades on AMD are working. On NVIDIA, unfortunately, we got a red candle at 208 right at the open. And now we're back to 205 as NVIDIA continues to be flat right here. Why the software names down? So if you're just joining, IBM put out a report saying that most of the software spend they thought was going to be allocated to them as a percentage of the enterprise budget this quarter ended up going to capital expenditures, aka memory, GPUs, etc. That is why the semis are really green today. Micron right there, 984, up 5%. And the software names are really red. The expectation as IBM, wow, loses 217. My goodness. IBM is setting the precedent for every software name by essentially, I guess, pseudo telling the market that the CapEx tailwind is becoming a serious headwind for software names. I, for one, as Apple goes down about 1.3%, believe this is an IBM problem, not a software problem, but the market is taking everybody down with it. Apple right there down 1.4 as that continues to get hit. Why is ARM down? ARM actually got an upgrade this morning, down about 5.2%. I can't give an exact reason for why ARM is down, but ARM is an expensive stock. Still trades at 60 times sales. Stock was at 450 a month ago. Got an upgrade to 430 today. Don't have a reason for why it's down. It should be up, to be honest, because the price to earnings multiple, price to sales multiple have not mattered for the semis on the day they get an upswing. And it's kind of bifurcated right now. You're not seeing all the semis go up. Intel's up. ARM theoretically should be up. Nebius just got an ugly red candle from 222 to 216. Iren is now going red. Iren below 40. CoreWeave, 8509. That's still up 2%. So once again, the open is not that friendly to semis. I mean, they're green. They're not super green. Some of them are doing better than others. Qualcomm up 1, TSM up 1, but a lot of them are lower from where they were in the pre-market. SMCI 15 cents away from going red. AMD, Micron, and Dell, I would say, are having the best day when it comes to semis. And you put Marvell in there as that is up 5%. Where is IGV? IGV is down 1.48. As that one continues to get a hit. Hollis says, I'm selling IBM puts, so much premium right now. Yeah, I think the IBM sell-off is a little overdone. 25%. I mean, if you weren't happy to own it at 270, maybe you're not that upset to own it at around 200 or 210 if you're selling puts on this name. the broader thing is the level of uncertainty over the next 90 days on if CapEx is going to continue to move away from software spent on IBM and go to things like Micron. Like, I don't know, man. This is the first time a software company has come out and literally said people are spending more on chips than software, which is why we missed our numbers. Like, as bad as sentiment has been, there has not been a single SaaS company that came out. Bill McDermott, Karp, Benioff, none of them have come out and said, yeah, people are spending too much on hardware infrastructure. They don't have the money to spend on software. Because A, they knew if they were to say that, that would be really bad for their business. But B, because they haven't had that problem. The fact that IBM had to actually say that, either it's the worst excuse they could think of, or it's like a legit excuse. And because it is a legit excuse for their business, it is being interpreted as a potential fundamental structural problem for the rest of software, which is super bullish chips, but not or super bullish semi stocks, not really bullish the software names. NVIDIA 204. NVIDIA looks like it wants to go below 203 right there as that continues to get a hit. The rare earths, those are doing good today. MP, that's up 3.5%. USAR, that's up 5%. So you're getting the rare earths to start participating. Cerebras, are we dumping? Cerebras, we are. Wow. ARM and Cerebras. So again, all the semis not really cooperating here, as that's down 6%. At least Amcor is up 5%. I don't know why Cerebras is dumping. I don't know why ARM is dumping. Again, they shouldn't. They really shouldn't be. Keel, that's up a little bit based on some of the other data center deals. Warsh will be talking in a bit. Jamie Dimon also said some good stuff based on their quarter that was positive around AI. Basically, he said, we believe AI will have huge efficiencies in certain parts of the market. Again, JP Morgan had the best record league quarter profit in the history of their. So if we're looking for the banks to have a good quarter, they showed that they can have a good quarter. And now we just got to see if the tech companies also cooperate. Here's what Jamie Dimon said on the earnings call this morning.
Continue. Could it get a lot better than this? It can get better. But, how much better? I don't know.
It is pretty darn good right now, of course.
Consumer Asset Bank. No,
that's the thing, right?
And she's fantastic. I'm back on this.
To do a better job for our clients. That's our job. We fully expect it'll have huge efficiency in certain parts of the company. And we analyze it all the time. I think we've mentioned in the past, we spend quite a bit of money on it, and it's kind of just starting. So we do expect that. I think you have to put in the back of your mind that there are areas where we may just accelerate what we do that we want to get done anyway. Think of certain, applications and customer-facing things and stuff like that. We are preparing to make sure we can retrain our people, and we have had discrete areas where we did reduce jobs by 30% or 40%, and most of those people went for jobs elsewhere.
All right, so 30 to 40.
So, relatively speaking, on the idea of AI either replacing jobs or making things more efficient, Jamie Dimon is affirming that those sentiments are correct. The question is just going to be, what does it mean for broader earnings growth across the entire sector when it comes to different parts of the economy? It's obviously across the bank sector when it comes to SG&A costs, how much they can reduce that based on automation. Rocket Lab getting some love right there, 81. Let's see if that can continue. Rocket Lab 8108. But, JP Morgan stock and the other bank stocks not really getting the benefit of what they're doing when it comes to AI. ARM, that's now down 4%. Apple's down 1%. NVIDIA still 204. NVIDIA looking very close to going below 204. Ondas, this one fell below 7 yesterday, back above 7. Getting a little bit more love right here as that continues to go green. 7.20. Amcor, that's up 4. Cerebras still getting hit. CrowdStrike is up 6. That's actually quite surprising given all the software names are taking a hit, including Microsoft. We didn't even talk about them, but Microsoft fell 3% based on that IBM news. So the fact that cybersecurity is actually holding on, actually pretty freaking incredible. Look at Palo Alto up 4.3%. How about Zscaler? Zscaler is, wow, up 3%. The software names really, or the cybersecurity names really not being affected by what's happening with software. Rocket Lab right there, 8126. Rocket Lab trying to go for it right here. SpaceX 142.75. So SpaceX also getting a little bit of love. Yeah, this is actually one of the better space pumps we've had in a while. Lunar up about 2%. ASTS should be above 70. ASTS just above 70 right there, 4.9%. SpaceX again doing okay. Snowflake, that's also holding on strong. So not all the software names are getting hit, but a decent chunk of them are, just like not all the semi names are going straight up. I mean, I think we're getting a little bit more balance to the market where it's not literally all software is red, all semis are green, or all semis are green, all software is red. MongoDB right there, 1.5%. Adobe, that's down 4. ServiceNow down 6. Oracle's flat. And Palantir about 125. Okay, so Palantir got a nice green candle from 122. Where is SoFi? A little bit of a move right there, 2.6. As that's trying to come back. Zeta's also trying to come back. War still hasn't spoken yet. That is correct. Again, I don't think he's going to say anything that different from his opening statement. His opening statement is we are concerned about inflation and we will take whatever steps are needed to tackle inflation, which is what he's supposed to say. Now, if he gets into a fight with a bunch of Congress people when they grill him on a bunch of different questions, that, you know, that could potentially be a different situation we have to watch out for. CrowdStrike, wow, 200, 6.4%. That's 800 post-split, right? Or pre-split. So maybe the market's waiting on that. Rocket Lab trying to hold on to 81 right there. AppLovin, that also flipped green on the day. Do we have any other macro data? Actually, we did get ADP jobs reports, which are not the best, but not the worst. So ADP data showed private hiring slowed for the third straight week. Private employers added about 19,000 jobs per week. The data covers the 4 weeks ending June 27th. Hiring slowed for the third consecutive week. The 4-week average was eased from 21,000 the prior week, and hiring peaked at 40,000 jobs for the week ending May 2nd. So you had really good inflation data today that actually came in better than expected. And then you had job data that didn't come in as well as it needed to, but technically if we have less jobs, we also have less inflation. So, you know, at least in the eyes of the market, that might actually be a positive for inflation not being as aggressive. But in the context of the labor market, you know, hiring slowing down is not really the best. Are you able to sell options on SK Hynix? Well, if the options are open, then most likely, yeah, the options are open. You might not have a ton of liquidity, so the bid-ask spread is going to be a little potentially hard to navigate, but there should be a ton of volume on this, so it shouldn't be that crazy to get filled. But yes, options are open on SK Hynix. So, stock's up 9% based on its performance in South Korea last night. So it's really contingent on what happens there. CrowdStrike, that's up 7%. Ondas up 2%. Rocket Lab now trying to make a move to 82. It looks like it wants 82. Got to get over 81.60. Did Nebius lose all of the pump? Nebius did indeed lose all of the pump right there, unfortunately. Oracle below 130. Below 130 here. As that's getting hit. Oracle 130. I'm not really seeing juicy software buys, to be honest. I thought it would be a lot better. Like, I thought we could get Shopify below 120. That's not happening. Palantir's almost back to 128. Figma, I kind of wanted at least at, 20. So the juicy, I mean, ServiceNow, I feel like is the best out of all the software names, but that one's also starting to recover here at 104. I don't know. IBM 221, IBM kind of stuck within that range. All right, there you go. Rocket Lab getting a nice breakout. Nice breakout right there. Wow, look at that. 81.75. 81.75 right there. Let's see if 82 is possible. Nebius 218, SK Hynix 10%, AppLovin up 2.4%, SoFi that's up 2.84. IGV almost recovery. IGV, yeah, look at IGV. It was down 4, now it's flat. Yeah, not a super ugly day for software, at least on the index level, and many of those names starting to recover, which is good because IBM should not have been the reason for why they all take a hit. It doesn't make a ton of sense. The Clarity Act, is that getting passed? Well, Trump tweeted yesterday that he believes the Congress should pass the Clarity Act in honor of Lindsey Graham, who would have never wanted China to win when it comes to crypto. So, Trump obviously wants it to get passed. We're going to see over the next couple of weeks if it ends up getting passed. By the end of the summer is where some of the, odds have been saying it could get passed. CoreWeave just flipped red, but at this point, we're going to have to see. It would be good for Bitcoin and Ethereum, but CPI being better than expected is way better, I feel like, for Bitcoin and Ethereum at this moment. How about Microsoft? Is that a buy today? Down 2%? I feel like that's the buy today. It's freaking Microsoft here. I feel like that might be the one today. It was at 390 yesterday, 382. They got earnings coming up. Bloom, where's Bloom? Bloom is 246. That's up 5.7%. As that one's continuing to hold on. CrowdStrike, wow, dude. What a pump on Crowd. 8.3%, 203 right there. Rocket Lab lost 81.50, now at 80.82, but still holding on to the 80s. As more of these names are taking a hit. How about Spy? Again, Warsh speaking in 15 minutes. We'll listen to what he has to say. Spy right there at 750. Unfortunately, Mr. CoreWeave did go red. Okay, you know what? I'm going to buy two software names. One I've had for a while, but I've not bought the dip on. The other one, honestly, I've never had it, but you know what? We're going to buy the 6% dip. So we are buying some Microsoft right now. We are doing some Microsoft. We're going to do 5 shares of MSFT. This is in the long-term port. Got Mr. Microsoft right there, 382.54. This is in the long-term port, not the trading port. And you know what? We're going to finally pull the trigger on one of these names that I feel like has been disrespected for a while, and we'll take advantage of it being 6% down. We are going to do Mr. ServiceNow. We're going to do it. We're going to do it. 15 shares, 105.07. Have never owned ServiceNow before. We are in. That will be the software dip buy for today. Microsoft, feel like I bought Microsoft at 413. That was the first time I bought Microsoft. This was 2 months ago. I've never added to the position since then. I've been buying Meta really since then. Meta is now pumped to the point where I do not want to be buying more Meta. So let's see. Maybe Microsoft gets the mean reversion here, at least back up to the 420s, 430s. I could easily see Microsoft tanking on earnings if they say something about CapEx that the street doesn't like. But, I mean, dude, it's down 20%. That's doing 40% Azure growth. At some point, I feel like the street has to change their mind on this. And yeah, ServiceNow doesn't deserve to be down 6% today. Now, granted, ServiceNow could easily fall below 100, but this thing was stuck below 100 for about a month. Finally got the rebound a week and a half ago as the semis started faltering. So being down 6% today doesn't make sense. Just like Palantir at 122 pre-market didn't make sense. I was thinking of buying Palantir pre-market, but I already have bought Palantir at 122, 123 so many times this year. So for me, it kind of needed to go below 120 psychologically to buy more. But Palantir almost getting back to normal as that continues to go higher. Salesforce, are we down? Salesforce also nice little green candle from 159 to 167. CoreWeave, unfortunately, going red right here because even with the Nebius and CleanSpark deals, because Nebius and CleanSpark are losing some of their steam, I think the other neoclouds are getting hit. But all of the deals we've been seeing around data center construction is unbelievably bullish to neoclouds. I mean, dude, CoreWeave is now flat year to date, 45 billion market cap with 100 billion in backlog. It's trading at 2 times sales for next year, actually 1.5 times sales for 2027. Like it does feel like there's an opportunity. Again, we bought CoreWeave at 82 last week, 82.17. So I would kind of like it to go below 80 to buy again. Let's see how the market thinks of this. Oracle right there. Once again, losing 130. What about Iran? I have Iran at 43. Bought this 8 months ago. I am perplexed by Iran not being able to show off new deals. I mean, the NVIDIA deal was a new deal technically, but it wasn't really the type of deal that it needs to, get the street excited. I just don't get what's going on with Iran. I don't get it. There's so much data center demand. There's so much compute demand. I don't even mind that they're buying a patch on the Golden State Warriors. I actually think it's kind of smart. You have a bunch of Silicon Valley people that go to those games. They get to see Iran's logo everywhere. I don't think that's bad. I don't get why they haven't been able to announce a new deal. Unless they're really negotiating it and it's going to be some crazy freaking deal in a couple of weeks with Anthropic and, stock's going to get re-rated to $70. But it is perplexing to say the least. AppLovin, is this one recovering? AppLovin, at least 450. As that's up 1.8% as well. Martin says I have Microsoft at 349 and now at 99. Congrats. I mean, a lot of these names have presented opportunities. The reason I'm buying the dip today is because I do not believe IBM's comments are enough to justify why the software name should be taking this big of a beating. It just does not make sense to me. And so, that's my logic here. This one is a little, as Trump would say, cuckoo. Really? We're going to take down all the software names because of this? That is weird. That is weird. Amit, you should have Iran Bulls on the channel. Dude, if you know some Iran Bulls, give them my info. Tell them they are welcome on the channel. I would love to interview any of them. I have an open invite to any Iran Bulls, CoreWeave Bulls, Nebius Bulls. I have no discrimination in talking to any of the NeoCloud Bulls. I'm sure that people would enjoy hearing a podcast of someone super bullish on any one of the NeoClouds and explain their bull case. So if you know them, give them my info and they can reach out. ASTS, that's up 5%. Lunars, that's up 3%. SpaceX is up 1%. 2 million of QQQ puts were just bought. That flow just came in the Qs with the red candle, but still up 1%. BM&R, are we actually moving here? Ooh, wow, 9.7. I knew ETH was up today, but on the prior days that ETH went up, BM&R actually ended up, flat to red. So we're actually seeing a premium to NAV right here. ETH up 5, BM&R up 9. This is theoretically what should be happening when ETH makes this big of a move. Remember, we talked about yesterday, Robinhood Chain, which I did a post on Twitter, is burning a ton of ETH. And it's really becoming one of the better decentralized exchanges out there. They have a layer 2 that's built on Ethereum, and it's getting a lot of activity. And I think that could be part of the reason, along with a really good CPI report this morning that's waking up some of the risk assets right here in the crypto, ETH being one of them. Bitcoin should also be up right here. Bitcoin is at almost 64. That means MSTR is up 5% as well. Yeah, that could be helping them. BMR is not above NAV. Yes, it's not above NAV, but it's acting like the price action kind of feels like it is above NAV. I know it's not technically above NAV, but in the old days when BMR went up, ETH was up like 2%, BMR was up 4%, right? There was like a delta. That's the reason people bought BMR. There was a delta between the treasury and the underlying asset. And today, for the first time in a long time, it kind of feels like that price action is happening again. Palo Alto, that's up 4. Ondas, that is up 2. Did anyone buy the dip? Put in the chat. If you bought anything today, sold anything today. We're about 25 minutes into the market open. IBM still down 23%. Again, if you're wondering why IBM is down, they put out a note that said CapEx spend is hurting software spend. Consulting revenue was flat. Infrastructure revenue was down 1%. Overall top-line revenue grew 1%. As a result of that, the street was upset. And that's why the stock took a hit. Let's get a little bit more coverage right here on Mr. IBM.
So they get what they need for their data centers. And IBM is just on the losing side of this right now. People aren't spending the money on mainframes. At least that's what the CEO is saying ahead of their results. So hopefully we'll learn a little bit more in the coming weeks when they actually give their official results. But it seems like this is what can be done at the moment, is sort of prepare the market for a potential miss there.
And it's interesting to see the CEO saying that we fell short. when it feels like, Carmen, just what you're saying, I mean, I don't know what else they could have done. And I wonder if this is a warning for other tech companies. When you have hyperscalers, the big CapEx spenders, a third of their budget going to chips, some estimates are that grows by 50%. Isn't this a problem for the entirety of the ecosystem unless you're one of these chip makers with 86% margins?
I mean, I think that's right. And it's interesting because people are also really worrying about the peak spending there for those chip makers. And it looks like maybe we're not there yet. This is where people are expected to continue to spend. I think the other thing that's interesting for IBM and some of the other stocks that we're seeing down today are these big software players. So Microsoft's down, Adobe, some of these other big companies. And those are sort of the two big things that IBM does, right? It's mainframes and then it's software. And these are both parts of the market that we're seeing not get the AI shine.
I mean,
well, it's affecting IBM, but Palantir moving on from this software drama today. Look at that. 130.47. This thing was at 122 pre-market, folks. Complete recovery from that nonsense we got from IBM. I wonder if that happens to the other software names. And also, if that does happen to the other software names, do the semis go down if the software names go up? Micron already getting some red candles, 994 to 973. Intel, 108 to 106. SanDisk, which got an upgrade to $3,000 yesterday, 1815 to 1775. So we are seeing some of the red candles come in. Microsoft getting a green candle, still red on the day. ServiceNow needs to break 105.70, but also getting a few green candles. SoFi also getting a break. SoFi honestly trades with the software stocks. Usually SoFi does that. Robinhood as well kind of also trades with the software stocks. I guess fintech and software are going together. Robinhood almost 112. Let's see if we can get a breakout on Robinhood. Wow, Palantir 131. Nice dip buy from 122 for anyone who got that in the pre-market. You have to be awake and see that IBM news. Rocket Lab, 81.79. Rocket Lab looks like it wants 82. It got very close at 81.98. Let's see if it gets there. Fastly also, that should be up today. That is a software name. Yep, Fastly's up 4. Okay, a little bit of software rotation. Maybe 2 minutes until Warsh goes live. This is very similar to what has happened over the past couple of days. Semis green pre-market. Market opens. They can't really hold that green, and the market rotates somewhere. Some days it's software. Some days it's consumer discretionary. Yesterday was energy and real estate stocks. Today, it seems like it's more software than not. CoreWeave 83.52. Nebius losing a lot of its pump from the market open. And Zeta joining the party. Zeta was at 22.80 yesterday, 21.87. They got a big bounce from 20.50 to 21.89. Okay. This is what happens every single day at this point now with these crazy rotations. Again, Warsh will be live soon. Here is the Bank of America CEO. Let's hear what he has to say on these earnings and where he thinks the state of the economy is going right now.
Well, number one, all the businesses performed well. They all had operating leverage. They all had efficiency growth. They all had strong revenue growth. They all formed net new households. So all the businesses performed well, led by the markets-related business, just because the activity is very high. So whether it's the investment banking revenue, which is up significantly year over year, the trading revenue, which is up significantly, and importantly, the wealth management revenue is up significantly. So we feel very good. The team did a great job this quarter, 34% EPS growth. Really, really strong, 17% return on tangible common equity. Things we thought we told people we'd get to over the next 12 to 18 months, we got already. They did a great job, and they controlled expenses better. They had a great operating leverage of 660 basis points, which is the key to let that NII growth in our company fall to the bottom line, and they're doing that.
Yeah, investment banking up 50%, sales and trading up 30%, equities up 70%. You know Wall Street, Brian. The question from here is this as good as it gets?
Well, we still have very strong pipelines in investment banking. the IPOs and et cetera. Deals are still getting done and very strong interest in doing transactions. The AI build out still has a lot of debt funding and other funding required. So it's a very good environment. Investors are invested. And so whether it grows dramatically from here or continues this level, both will bode well for our company. But if you look at the end of quarter activity pipelines, it got stronger during the quarter, and that's good. And underneath that, though, you have to step back and say, what drives that? The real economy is growing in the 2% level. We haven't predicted to continue that for the rest of the year. Consumers are spending higher in the month of June than they did last June by about 6%. In July so far, the same. That activity is very, very strong and provides a great backdrop for the economy in the U.S. to grow. And around the world, there are issues going on in wars and things that we're all dealing with. But the reality is our international business had a great quarter, fueled by a lot of the activity in Asia.
Yeah, I was going to ask about the consumer because there was some worry that higher gas prices would weigh on consumer spending, that low-income consumers were feeling it the most. I mean, overall, what are you seeing right now from the consumer?
So our institute, which is part of our research team, puts out reports all the time, and it's been interesting. So as we saw in the month of June, what we saw in our 70 million consumer base, which is talking a lot of debate about real-time metrics. We get real-time metrics that you'll hear the discussion on later today. And those metrics show that the overall movement of money in the economy, which is about $400 or $500 billion a month, which is a big number, is moving at 6% in June and will continue that in July. Interestingly enough, yes. Actually, the month of June, gas spending came down, obviously, because the oil prices have started coming down. But overall, consumers adjusted to that and spent. And if you look at the lower income third of the households, you're actually seeing the wage growth where you can see deposits in their accounts is actually going up and catching up to the other households, the medium and high earners. That's good. So overall, consumers in pretty good shape. Now, questions of affordability are out there, housing affordability, gas prices at this level still don't make people happy. Food price inflation's flattening out, but still higher than people are used to. So they talk about it a lot, but when you look at what they're doing, they're booking cruises, they're going out to eat, they're doing out-of-home entertainment generally, concerts, things that they do in the summer, and that's good news for the American economy.
Yeah, watch what they do, not what they say. We did get
You agree with them? Do we think the consumer, in the eyes of the Bank of America CEO, is pretty decent? Or, is he just saying that realistically the consumer is still struggling? By the way, I don't know what the hell just happened to Nebius, but 212 to 207 within like 5 minutes as Nebius completely flips red.
good news on inflation this morning. Saw a negative number, kind of across the board. Not fully, but inflation is still elevated. Brian, how big of a problem do you think inflation is right now for our economy? And do you think the Fed should do something about it?
Well, I think the reality is they have to make sure that these statistics show trends that are measurable. If inflation was coming down between all the things going on with the war in Iran and in the Middle East, the issues of inflation on gas prices and then beyond that to other inputs is still coming through the system. So it's something to worry about. But I think, if you go back and reflect on the last 20 years, we got so worried about inflation and other things. We actually kept the place so restrictive on a relative basis that it actually didn't help. And so I think they've rethought this. They're going to continue to rethink it. I think the economy is running fine right now. You're seeing good gross growth and good net growth in GDP. And they got to worry about inflation. You're seeing it trail down, coming down more slowly than people thought. But it is not, it's not kicking back up strongly. It's trailing down. And as long as it keeps doing that, we don't think it gets down until into the 28, our research team, but that means rates will stay higher. It doesn't mean they necessarily have to raise rates. They'll have to base their judgment on what happens between now and then. But we have rates raising, but the reality is it'll take a time for inflation, as always does, but it's working in the right direction. And the question is be patient and not overreach one way or the other way, quite frankly.
Brian, it's David. This is an extraordinary time. I think we can all agree. $1 trillion in CapEx spending from, I think it's only 6 companies alone. The enormous capital raises going on to fund this AI build out in both the bond market, the equity markets. I'm just curious to get you to reflect on, where is the...
Okay, we'll get back to that in a second, but everything kind of taking a drop right here. Software not as aggressively as the others. Rocket Lab, ugly 82.50 to 80.4. Look at those candles just stair stepping you down. Intel losing 106. Micron losing 970. All right, so pre-market pump did not last. Nebius, did they announce something? Warsh is not live, guys. Warsh is not live. He's not live yet. Oh no, is he live? No, he's not live yet. I don't think there was a dilution news, which would easily take Nebius down, but it's not down. CoreWeave, but there's no dilution news. CoreWeave 81, Oracle 128. I mean, Warsh is not live. He didn't say anything that messed things up. DeepSeek IPO shouldn't be a reason why the neoclouds are falling. If anything, that should be bullish. DeepSeek is already weighing a new funding round with a 37% valuation jump at just 1 month after raising $5 billion. Warsh is not talking. There's some other Congress people that are talking. So he's sitting there, but he's not actually talking. So he's not saying anything. So there's nothing to watch right now. We gotta wait until he actually officially starts talking here. That's kind of crazy though. That candle came out of nowhere, just across all the semis. Software names actually holding up. SoFi's up. ServiceNow still trying to hold up 105. AppLovin, that's going even higher. Warsh is going to say to bet on France. Oh my gosh. SpaceX, that's up 2%. Palo Alto. So the software name's actually holding, folks. Palantir, almost 131. It was too early to say that semis were rotating into software, but if the semis keep falling and the softwares keep holding up, maybe they are rotating. Even with the freaking the IBM news today. This is incredible. For 3 months, it's been semis up, software down. For a week and a half, it has been the opposite. I'm not saying the software stocks have gone to the moon, but they've definitely not been destroyed like the semis over the past couple of days. But we just got to see if that continues to hold on. Let's go back to the Bank of America guy, and then the Warsh press conference should be starting really soon. Again, he's just sitting there, not talking yet, so we should be getting him very soon.
Forever.
Where are all the big AI job losses then that some were expecting? Is it coming?
I think it's a responsibility of management teams like ours to manage the impact on the human side of this well. So we talked to our teammates. We went to them, said, what are your ideas? How you can make AI work for you? Can we do 200,000 teammates have access to it? They're using it every day. This is all about us improving our processes and our productivity. If you watch your headcount growth and watch your hiring, we hired 2,000 kids for the summer and 2,000 more permanent will start here in a few weeks. But we need to hire almost 1,300 people a month to maintain neutral headcount. So if you watch your hiring and are careful about it, you can actually manage the headcount change pretty easily, like we did for the last 15 years. But it's up to management teams to work with our colleagues, our teammates in the company, and make sure this works for them and works for the shareholder and works for the customer and frankly works for society. And we're engaged in workforce retraining. 14,000 people changed jobs at Bank of America last year to another job. All that requires retraining, and all that it allows us to move people into new things for them. We want people to spend their entire career here. So it's just good management to manage this well, but it has had an impact in terms of the numbers of people working, but it's been more modest than people said because it just takes longer, and there's new growth that we're putting people against. We're adding relationship managers and financial advisors and private bankers all over the world. We added 9 investment bankers yesterday, we announced.
Yeah, speaking of jobs, I mean, Wall Street is still wondering about yours, Brian. I know since you announced last fall the new management structure, are you still planning to stay through the end of the decade? What are you still hoping to do?
I'm having a lot of fun, and I'm hopefully doing a good job for the shareholders. And as long as those two things are true, I'm here to continue to do that.
Some people are wondering whether you'd hire Marianne Lake since she left JP.
All right. We are still waiting for Warsh. Again, guys, he is not talking. He is not live. He is sitting there letting the politicians yell at him right now or say whatever opening state. Like Maxine Waters is talking right now. So until Warsh actually gets ready to talk, then you're not really going to see much of it. I mean, we can listen to the politicians talking if you want, but I think we got to wait for Warsh. I mean, this is what's going on right now.
It has been supplied. It's been supplied from
Even Bloomberg's not playing what Maxine Waters is saying. They're just talking over her right here. As you can see, Warsh is just sitting there and listening.
the AI corner is now growing as well. There's been an international component of rising rates, and obviously that's to do with the energy situation.
So it might take him another 15 minutes to start talking, but as soon as he starts talking, we will take a look at it. Rocket Lab getting hit right there. Wow. What a pump fake by Rocket Lab, 82.50 to 80. And Nabesis, there has to be some news, dude. That's an ugly, ugly candle. 220 to 201. Dude, this has been happening more recently than not, right? Like the semis just, they're not like they used to be, even a freaking few weeks ago. Like those rug pulls have happened more often than not. Qualcomm right there, 181. That's down 2%. CoreWeave and Iren getting hit with Nebius. It could be algos, sure, but that just means the algos aren't friendly to the semi names anymore. Or at least they haven't been. Meta actually flips green. Again, when the hyperscalers flip green, you know that the semis are probably going down. CrowdStrike up amazingly, 9% here today. I don't know what the headline was on cybersecurity, but it was enough to get CrowdStrike. Oh, the reason cybersecurity is up is because of what the IBM CEO said. Wow, that was enough to pump CrowdStrike 9%. So Arvind Krishna said clients were distracted by rapidly evolving industry-wide cybersecurity concerns, and that IBM did not anticipate the magnitude of the CapEx reprioritization. My goodness. So IBM basically making the bull case for cybersecurity as the most important software part of the AI stack. And the market's like, okay, we're selling IBM, we're buying CrowdStrike. As Palantir continues to do well, dude, look at that, 130, 169. As it continues to make a bigger move. I don't know why ARM is down today. I have no idea. If anyone knows why, let me know. I'm not sure why ARM is getting hit this much. But it's obviously getting hit. If you have a reason why Nebius is down, let me know. I don't see the reason. Is there like a lawsuit or something? The DeepSeek IPO news can't be the reason for why the neoclouds are down. I don't think that would be the core thing affecting it. Again, we are still waiting for Warsh. He's not talking yet. Goldman's having a great day. Yeah, Warsh is still listening. I don't know how long he's going to have to listen to these other politicians talk. But I'm going to see.
Reimbursement. We're also going to have to see how our Gulf allies are going to respond to the president's plans, considering that they have taken the brunt of Iran's retaliation when it comes to hitting U.S. bases in these countries. But also, according to a recent analysis, Gulf allies would pay 80 to 95% of total costs if any sort of tolls are levied, whether that be reimbursement or formal tolls that Iran has looked to implement. So a lot to follow here. President Trump meeting later today with one regional leader from Iraq, which is also looking into other ways to divert energy away from the Strait of Hormuz. And that could be one of those other themes to follow.
Just back, Michael Ball, on this question of the push and pull between energy prices, which had been coming down, and CPI, which clearly in the last month came down, the first negative print since 2020, and the pressure continuing from the Middle East. Is there a degree where the pass-through of energy just seems to be more benign than we expected? So we can even handle higher prices if they do reignite, and they have been, from the war in the Middle East?
Yeah, I'm less worried about the level right here than the rate of change. And what happened was positioning got very short oil as we thought everything was clearing. We had a 2-month window. We were seeing ships moving through much more freely. Inventories were actually starting to build. And obviously we still had tightness in products, but the oil market.
People are saying it's the DeepSeek news. Why is DeepSeek IPOing bearish for the neoclouds? I don't get it. First of all, that's in China. Look at Palantir, 132. Second of all, I mean, why does that affect the demand for compute? New York City banned data centers. Isn't that old news, though? That's not something. New York, okay, that's actually 2 hours ago. But again, that's 2 hours ago. Why did Nebius not fall 2 hours ago, right? That candle happened 10 minutes ago because of something. Maybe it's algo, but it has to be a different piece of news. New York becomes the first state to impose a data center moratorium. 1 year construction ban will apply to data centers using 50 megawatts or more. I mean, look, the political backlash against data centers we've known about for a while. I don't know if that's enough to stop the backlog of these neoclouds. All right, Warsh is live. Let's get to Warsh. Here we go.
Room before Congress in keeping with the Federal Reserve Act. One of the largest figures in Federal Reserve history is Alan Greenspan, who passed away about a month ago after a century of life. We at the Fed recall the chairman's strong and steady leadership, his strong hand in a period of rapid economic change. And today we honor his memory. As a country, we just marked our 250th year. And when Americans count our blessings, we include an economy predicated on the brilliance of our constitutional design and a system of ordered liberty, an economy without equal in all it's done for human flourishing. Some forms of Fed communications, which I've spoken about previously, are discretionary, but not this one, and for good reason. It's a prudent and wisely conceived obligation designed to keep the Fed accountable, responsible, and faithful to its congressional mandate of full employment and price stability. These obligations are of a piece with the Fed's rightful independence in the conduct of monetary policy. Stepping back, I would say today as we sit here, Mr. Chairman, we're at a hinge point in history. It's up to all of us to meet this moment. The task for this generation of policymakers and of individuals and households in the private sector is to ensure that the American economy excels far into the future. Now, at the Fed, our number one objective is getting monetary policy right. That's our clear and constant aim, the star we steer by. And if we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. Just a month ago, I chaired my very first meeting of the FOMC. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly price volatilities and variations are inevitable, especially in an unsettled world, underlying inflation over longer time horizons is determined largely by monetary policy. As the chairman said at the outset, inflation's a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability. This was the focus of our June meeting, at which we decided to hold the target range in the Fed funds rate at 3.5 to 3.75%. Now, naturally, our work at the Fed demands a proper reading on economic conditions. As you see in our report, economic activity grew at a solid pace, showing remarkable resilience in the face of recent developments. Household consumption, moderate. Manufacturing output, it moved up steadily this past year. The housing sector, however, gives a somewhat different picture and continues to lag. I want to highlight the most striking feature of this economy right now, and it's business investment. The rapid pace, which appears to be accelerating, reflects in part the construction of data centers and other infrastructure, and the immense demand for AI-related equipment and software. Investment in equipment overall increased about 8% for the year in the first quarter. Within that category, high-tech spending logged an especially impressive growth rate of nearly 25%. At the Fed, we don't yet know fully the extent to which the economy will benefit from AI. Yet it seems inevitable that that which we're now calling AI investment will soon just be called investment. Even so, new opportunities for the economy introduce new challenges for central bankers. We at the Fed are monitoring the implications for employment and for inflation. That brings me briefly, I'll end here so I don't go afoul of the time commitment, to the supply side of the economy, which deserves equal measure of discussion. Productivity growth has been strong, predating gains from AI adoption. America's labor force appears stable. Job creation has in fact kept pace with the workforce. The unemployment rate is low and changed little over the last year. And we've seen relatively few layoffs. In closing, I will say this. I came to my new position as a believer in the very best of the Fed's traditions. I'm heartened by the welcome I've received and by the encouragement of my colleagues in considering how best to advance the conduct of monetary policy. We have a duty to point this institution forward, to take a fresh look at current practices, to make sure we're serving the objectives you gave us, and we're going about it systematically. I've appointed task forces that you've already referenced in 5 key areas to improve the broad conduct of monetary policy. 1, Fed communications. 2, our balance sheet policy. 3, our use of existing data sources. 4th, productivity and jobs in an era of remarkable transformation. And 5, and not least important, the Fed's inflation frameworks. The purpose of this initiative is to equip the Fed to make better decisions in monetary policy and put these years of high inflation behind us. We're starting a new chapter, Mr. Chairman, at the Federal Reserve. In this consequential time for our nation, I can report to you that we at the Fed intend to be fit for purpose and focused on the future. We are the Federal Reserve, Mr. Chairman, and we're determined as ever to fulfill the mission that Congress has given us. Thank you, Mr. Chairman. I welcome your questions.
Thank you, Mr. Warsh. We'll now turn to member questions. I recognize myself for 5 minutes. As outlined in your statement, inflation is the result of many factors. Of these, the Fed has control only over one: monetary policy, as expressed through its interest rate and balance sheet policy. Today, a potential second surge of inflation is appearing due to factors outside the Fed's control. What the Fed can control is how it reacts. Though upward pressure on prices may diminish on its own, it's not a sure thing. The Fed may be able to look through these inflationary pressures, but the Fed has believed that before and has been wrong. High inflation affects Americans in the here and now, not in some hypothetical future composed of long-term projections or of inflation expectations. Mr. Chairman, I was very encouraged to hear both in your testimony and your opening FOMC statement about restoring price stability as a top priority for you. When we think about that in the near term, though, how do you and your colleagues on the Open Market Committee plan to accomplish that given the policy tools at your disposal?
Well, thank you, Mr. Chairman. We want economic growth to be more broad-based, and we want the change in prices, the increase in inflation, to be more limited. There are a lot of things that are happening that are outside of our control, as you mentioned, conflicts overseas and the rest. We can't have and shouldn't have a direct control on that. But inflation's a choice. We monetary policy makers need to choose lower prices, and that's the commitment my colleagues have made. In direct answer to your question, I would say we're doing 3 things. 1, commitment, which you heard at our first FOMC meeting, and I hope you heard today, is we're committed to the Fed to deliver price stability. We're committed to the 2% inflation goal. And so for businesses or households or market participants who came into this saying, well, they said before they were committed, but they seem to have tolerated a higher level of inflation, that commitment is resolute. Second thing that we can do is take ownership. This isn't a time for us to pass the buck, to blame others. The Federal Reserve can and will deliver price stability. We have the tools that you mentioned, both interest rates and balance sheet policy, that can help us achieve that aim. And we have the tools to deliver that. So it's a function of commitment, responsibility, and tools, and we're 3 for 3 and we'll deliver.
Thank you. I referenced in my opening statement about the 2020 decision on tolerating higher inflation and that it's now been abandoned by the board. Clearly, I think that was a policy error. It was praised by some at the time in August of 2020, but I found it alarming at the time it took place. First of all, do you agree with the FOMC's decision to abandon that? And secondly, how do you consider this past 6 years of experience when you look at the task force work on the framework question for looking at inflation?
Yeah, so there's no secret that at the time that the framework in 2020 was announced, the new framework, which was intended to get inflation higher, that at the time and in subsequent years before finding my way into this job, I was very critical of it. That central bank wasn't the first central bank to ask for a little more inflation and end up with a lot more. It was a mistake. The framework did not succeed in its objectives, and I am pleased that before my arrival, that my predecessors took that and cast it aside. All central bankers are going to make some share of mistakes, but when they make a mistake, they've got to call it out. Had that mistake been called out sooner, I don't believe we would have been burdened with this undue tax over the last 5 years. It's nearly the same degree. That's why we are reform-oriented. That's why my colleagues and I are so driven by these task forces to think about them anew. And in final response, I'd just say one of the task forces you mentioned is to revisit the inflation frameworks that the Federal Reserve uses so that we can better understand what will cause inflation to rise and fall and what we can do about it.
Well, thank you. And you also referenced courage in your opening statement, and you've just outlined the toughness of the set of policy choices that you and your fellow governors have. So difficult that your longtime predecessor, Arthur Burns, described that mission as the anguish of central banking to try to cope with the different structures. So in the last seconds I have left, will your task force work review the issue of what you have control over versus what is in the control of the Congress and regulatory and executive branch authority?
Yeah, I'll be brief in my response given the time. There's no anguish in central banking here, Mr. Chairman. We have the commitment, the power, and the responsibility to deliver on the mandate that this committee gave us, and we will. We've got full ability to do it, so you will not hear me blaming anyone else.
Thank you, Mr. Chairman. My time has expired, and I recognize the ranking member, Mrs. Waters, for questions for 5 minutes.
Thank you, Mr. Chairman. Chair Walsh, Section 10 of the Federal Reserve Act states, and I quote, "No member of the Board of Governors of the Federal Reserve System shall be an officer or director of any bank, banking institution, trust company, or Federal Reserve Bank, or hold stock in any bank, banking institution, or trust company," quote unquote. This prohibition ensures there's no conflict of interest arising from your role in making decisions as a regulator that could lead to your personal profit. Yes or no? Do you think that's a sensible prohibition?
Check your mic, Mr. Chairman.
Excuse me, ranking member. It's the law you've written, and it's the law we will follow.
Let me keep going. Vice Chair Bauman and FDIC Chair Hill testified last year that this prohibition is good public policy as it ensures that bank regulators serve the public's best interest and not their own. Now, unfortunately, President Trump undermined the independence of financial regulators, mandating the White House must now review and approve regulatory rules put forward by banking regulators, including the Fed, except when it comes to monetary policy. And instead of focusing on the job Americans elected him to do, the president grossly profiting off of his position to the extent the president and other executive branch officials now have a say in regulations in the Fed issues. Chair Walsh, should those officials be prohibited from owning any businesses where they have a role in regulating them, whether it is crypto company or bank or anything else? Yes or no?
So, ranking member Waters, I don't mean to disappoint you, but we're going to stay in our lane at the Federal Reserve. The more we stay in our lane, the more we stay out of politics, the rules and obligations for others outside the Federal Reserve are not something at which I feel it's appropriate for me to opine.
I have here President Trump's most recent financial disclosure, which shows that Trump made billions of dollars in the first year of his presidency, the bulk of which came from his family's crypto businesses, all while he is responsible for overseeing the agencies regulating crypto. This is an egregious conflict of interest, and Congress must put an end to it. Now, I want to just show you, in case you haven't had time to look yet, that this is the president's disclosure of his financial interests. He had, this is, how many pages? 900. This is 900 pages of financial interest. When you have time, I want you to go through them so that you'll know and understand exactly what I'm talking about. So let me ask you, do you believe we must put an end to it?
Ranking member, you've given us a big job. We've begun in 6 short weeks to tackle the big job, and I'm focused on that.
Well, let me just go further with the prediction markets. I'm deeply concerned by the potential for regulators to profit from the use of material non-public information on prediction markets. There's a pattern of insiders appearing to profit ahead of market-moving Trump administration decisions, like when officials with close ties to the administration make trades prior to major tariff announcements. Chair Walsh, what oversight does the Fed conduct over its employees with regard to insider trading? And given the rise of prediction markets, is the Fed increasing its oversight for its employees profiting from the use of material nonprofit information?
Ranking member, at the end of my very first week on the job, I sent a letter to the 23,000 employees of the Fed, reminding them the best of the Fed's traditions, which is our culture. And included in that culture is integrity. Included in that culture is ensuring that we abide by the law and the very highest standards. That's a commitment that we've made to each other and will make to you.
Well, thank you. Chair Walsh, in 2019, I posed a simple question to former Chair Powell. I asked, if you get a call from the president and he said, I'm firing you, pack up and it's time to go, what would you do? Chair Powell said, of course, I would not do that. The answer would be no.
Gentlewoman's time has expired.
I asked further, he does not want me to go any further. Do you think the president doesn't have the
He can
authority?
answer that answer. He can give you an answer in writing, and I'm sure he will do that in a timely way. Thank you so much. The chair recognizes the chair of our task force monetary policy, Mr. Lucas of Oklahoma. You're recognized for 5 minutes.
Thank you, Mr. Chairman. And Mr. Chairman, I want to start off discussing these task forces you've created. Clearly, Chairman Hill's monetary policy task force idea is catching fire as we see this go across the landscape. What do you anticipate the result of the task forces to be? Can we expect public reports or other documents? How do you envision presenting the results of these findings, Mr. Chairman?
Thank you very much. Right now, they're in discovery mode. I've given the 5 task forces a tall task to go back to first principles, see what we're doing, see what can be improved upon. They were starting with a blank sheet of paper, and you had a highly credible central bank running the most important monetary policy in the world. What would we do? Are there existing practices we could improve upon? Are there hard questions we could answer? The changes in the economy relevant to that? In terms of disclosure, we're going to make sure that the external independent task forces, which are staffed by some superb Fed staffers, that they get to share their views first with the decision makers. There are going to be 19 of us around the table that are committed to listen to them with an open mind and make decisions. But there's going to be nothing held in secret here. This is a public discussion on these 5, and I'm happy to share the results and the thinking periodically between now and the end of the year, at which point I hope we've got some real conclusions.
Of course, the committee task force is very sensitive on this thing. Let's move to the communications and balance sheet. A concern I raised with your predecessor is the potential for confusion on the purpose of adjustments to the Fed's balance sheet, absent clear and frequent communication. For example, the trading desk announced yesterday it's continuing the $10 billion in bill purchases this period, presumably to maintain ample reserves. I understand not wanting to preempt the work of the Communications Task Force, but can you share your thoughts on balance sheet policy communication? Will you make it clear to the markets when shrinking the balance sheet is intended to tighten monetary policy rather than a deregulatory effort to avoid market distortions?
Yeah, you raise a couple of very good points. First, that some of the boundaries of these task forces will overlap. In some sense, each of the task forces are charged with obligations that are ultimately the FOMC and the Board of Governors. So the Communications Task Force and the Balance Sheet Task Force, there might be some overlap in their work. Let me cut to the chase. The balance sheet policies since the global financial crisis when I last served, the balance sheet regime has changed quite significantly. The size and duration of assets the Fed's holding have changed massively. They changed first in a period of crisis. That was the design of this new balance sheet policy. I don't want to prejudge decisions that this task force makes, but it's no secret of my long-held views, and I'll just state them three ways. One is the balance sheet is part of monetary policy. Monetary policy is made both through interest rates and through the balance sheet policies. The balance sheet isn't merely about plumbing. So that's point one. Second, I want to assure you that if there were a change in balance sheet policy, that we would preview it, explain it, debate it, and no changes in balance sheet policy would happen without good advance notice to the likes of this committee and broadly financial markets. And three, as we think about balance sheet policy, we at the Federal Reserve have to do, I think, a strong and compelling job to stay clear of fiscal policy. We want to be out of the fiscal policy business, which is between you and the Treasury Secretary and the President, and focus on monetary policy. Those are among the big questions I've asked this group of three distinguished leaders to take on, and I look forward to hearing what they have to say about it.
The composition of Treasury purchases continues to trend towards more price-sensitive market participants. The MPR details this trend along with the strong demand and increased liquidity, though we know from experience conditions can worsen quickly in the crisis.
Software continuing to do well. Palantir 132, ServiceNow, Microsoft starting to get a little bit of breakout. The semis continuing to struggle. So once again, even with that bad IBM news, software's up and semis continue to take a hit.
As we sit here today, the average duration, that is the average outstanding stock of assets that are held by the Fed and U.S. Treasuries is about 6.5 years. The Treasuries that held in the market are about 4.5 years. I understand in periods of crises, like the 2020 pandemic and the 2008 crisis, central banks by design needing to step into markets to create a fair price. But in more benign times, when our overall holdings are larger than the market, that's something where monetary policy is, in the language of former Chairman Volcker, on the edge of its authority. These are among the questions that this task force will look at.
Thank you, Mr. Chairman. Yield back, Mr. Chairman.
Gentleman yields back. Chair recognizes the ranking member of the House Small Business Committee, Ms. Velasquez of New York, for 5 minutes.
Right here. Welcome to the committee. I would like to start with a straightforward, simple question. Do you work for Donald Trump? Yes or no?
If I'm permitted to say, we're an independent central bank. We're honored to be independent. Our independence came from you.
Okay, that's enough. Thank you. What steps would you take if the president or others in the administration target you or your fellow governors because he doesn't like how many of them are voting on interest rate policy?
So it's not my intuition to engage in hypotheticals, but I'll tell you this: the Supreme Court said
that's an easy way out.
The Supreme Court said that the Federal Reserve and the conduct of monetary policy is independent. To the extent there were questions about it, the courts answered those questions.
So what would you do?
I would continue to do my job.
Okay, good. Chair Walsh, do you agree that current monetary policy exists in an extremely polarized and politicized environment?
Outside the four walls of the Federal Reserve, there's no doubt a lot of politics. But my goal inside the central bank is for there to be no politics. To the extent there's politics there, we're going to get rid of them.
Well, I, along with many on my side, will say that the attempted firings of a sitting Fed governor and Fed chair in the central bank's 111-year history is quite the politicization and polarization of the Fed. Chair Walsh, at your nomination hearing a few months ago, you said, and I state, I am committed to ensuring that the conduct of monetary policy remains strictly independent. You just said that. Are you still committed to conducting independent monetary policy today?
Absolutely.
Given the current mistrust of government and the political environment surrounding your appointment, the decision to limit communications and offload Fed objectives to clandestine task forces with no clear transparency calls your motivations into question. Can you commit today to institute an explanatory framework that details the reasoning of the Fed's actions following policy changes?
I'm here today, Congressman, to do just that. And I think I've demonstrated in my first 6 or 7 weeks in office a commitment to independence and a commitment to reform. Those two are of common importance, and I'm going to deliver on both of them.
I'm glad to hear that. Thank you. Chair Walsh, at your first post-AOMC meeting as chair, you were asked how you intend to handle Fed communications going forward. You answered, and I quote, "We made some changes today. I expect more changes to come, and some of those might well be worthy of a press conference." To me, that is not a very definitive standard. Can you commit today to creating a fixed public standard for which FOMC decisions and procedural changes trigger a press conference rather than deciding case by case which ones might be worth it? Yes or no?
So if I can be a slightly longer than yes or no, the last 63 months, maybe 64 months of high inflation above the Fed's objective suggests that it is immediately important to think about reforms, including in communications. And that's what we're going to do. I don't expect any of the changing communications to be about hiding the ball. The purpose of a change in communications is to do one thing right, which is to get monetary policy
I
right.
hear you, but are you instituting any standards that will qualify for a press conference as a worth news for the public and hear us in Congress?
So in a word, yes, and we have a task force that's going to help us think about how to do that and do a better job of getting policy right and making sure that you know what we're doing and why.
Can you give me a single objective or criteria right now on how you will determine whether or not a change at the Fed is significant enough for you to hold a press conference on it?
Mr. Chairman, I'd invite you to answer that question in writing, please, for the gentlewoman from New York. Chair recognizes the gentleman from Texas. Mr. Sessions, you're recognized for 5 minutes.
Mr. Chairman, thank you very much. Chairman, welcome. We're delighted that you're here. This is your first time here, but you'll get used to coming back. You'll be here twice a year. So your report to Congress is important, and we do count on the factual nature of that. I'd like to refer, if I can, to 3 questions and allow you to speak instead of myself most of the time. Number 1, housing interest rates, that would be on page 21 and 37. Then understanding better the agricultural stability of that marketplace. I represent a huge...
All right, we'll get back to that in a second. Overall, folks, Warsh is not having the biggest impact on this market right now. We are relatively flat from where we were in the morning, S&P 500, 751, but the semis, especially the data center stocks, I don't know what the hell happened. Nebby is 220 to 200. It looks like it wants to lose 200. It lost it for a second, then it got rebounded. Zeta, big recovery. Fastly, big recovery. Palantir, phenomenal recovery. 122 to 132. ARM, down 5. IBM, still in the gutter, down 24, but the market's not taking all the software stocks down with IBM, which is actually very encouraging. AppLovin got hit yesterday, 12%. That's up 2.8%. Meta goes green. Microsoft very close to going green, 382 to 386. Let's see if we can get this thing back up to at least the 388 range. Palo Alto, great day. That's up 5%. Amcor is up 4%. Cerebras is down 5%. So all the semis are not down, but they're definitely all not up. NVIDIA finally getting some love after that 204 level. Micron, which was pushing 1,000, now at 964. As this one is taking a pretty ugly hit. SK Hynix is doing well. I mean, again, up 12% right here. This one's actually massively outperforming Micron, especially from yesterday. So SK Hynix starting to get some juice in it. But if you look at it in a sector-wide basis, the semis are up, but they're not all up. The software names are up, but they're not all up. So it's kind of picking and choosing which ones the market wants to give some love to. ServiceNow almost at 107, still down 4%. It was down 7%. Adobe still down 3%. Salesforce down 2%. It was down 6%. Then Oracle was down 2% as well. Space names were taking a big move today. Unfortunately, Rocket Lab right below 80. So 82.54 ended up being the top for that so far, back down to 79.70. Yeah, Zeta, great recovery. And unfortunately, the NeoClouds, they are taking a pretty big hit. Again, that New York City news about data center moratoriums, that's not stopping Nebius, Corey, Viren, any of those guys from doing what they need to do with the other contracts they have. And it's just one city at the end of the day. So I guess perceptually that could be bearish as Nebius goes below 200, but I don't know if that's the real reason. ARM still down 6. Look at Palantir run, dude. 122.60 to 132.50. Let's see if we can get that breakout to 135. We were there last week. The market basically not punishing every software name because of IBM, and every semi name not being punished just because the NeoClouds are down. So kind of picking and choosing which ones are the winners here today.
Hugely agricultural
Discussion to a lot of hardworking Americans. It's higher than it's been, and in part that's because of inflation that has been above the Fed's objectives.
Okay, and looking forward,
so we have
your goal. What can we look at you and say, what is our new chairman going to do about that?
So he's going to deliver price stability with his colleagues at the FOMC. And what we can do in making sure that people are confident that the change in prices is at such a level they don't have to think about it. They don't have to talk about it. That is consistent with long-term treasury yields being lower. And that's also consistent with mortgages being more affordable.
Well, I agree with that, and I'll look forward to that. Agricultural outlook, as you know, farmers, the farm economy is going through some changes. Your viewpoint on that?
As you know, the Fed does not target particular sectors, but that doesn't mean these sectors aren't incredibly important. The housing economy matters to the economy, the overall economy, and so does the ag economy. It's the breadth and diversity of the U.S. economy that gives it its strength. It's the dynamism of what's happening in each of these sectors, including in agriculture, that gives us great comfort that economic growth can be materially higher than it is. We are not afraid of productivity-led growth, and that's not unique to AI. That's across all sectors of the economy. As I mentioned to Chairman Hill, we're looking for growth to be broader, and the change in prices, the inflation in prices to be more limited. Agriculture is not immune to either of those developments.
Well, the Agriculture Secretary has been added to some of your important committees to make sure there's discussion. I hope that you will listen to her. It is important for you to understand that when people talk about the stock market or investment, farmers and ranchers look out in their backyard at the cost of their equipment, at the cost of their land, at the cost of things. They don't have a stock market. They have their own investment. And I think that the secretary can be there to completely continue to remind you of that. Labor market outlook really looks good. Page 16, sir, your take.
Yeah, so the labor market has been remarkably resilient. The increase in nominal wages has been solid. You might have heard in my comments at the beginning of this a bit more focus on the price stability part of the mandate. I want you to know, though, that there is no disfavored part of the legislative remit that you gave us. The dual mandate is your word to us that we're going to focus on price stability and on full employment. I intend to do just that. And if I could add one other thing, in my view, the two parts of the mandate are not in conflict. This is not an either or proposition. The more we can do to deliver low and stable prices, the more we can get it such that people aren't worried about inflation. More employers are going to want to hire more workers. So you gave us a remit. We take both parts of it seriously. As we look out the window now, the labor markets look to be in pretty good balance. We've got some work to do on the inflation front.
Well, we in the One Big Beautiful Bill encourage people to go back to work. And that is why we do not tax overtime pay and why we do not tax what would be tips. We need to get people back in the marketplace. We hope you helped us out, Mr. Chairman. Welcome to us, Mr. Chairman. Thank you for your time.
Gentleman from Texas yields back. Chair recognizes the ranking member of our Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Mr. Chairman, first I want to commend you for looking to improve the data on which you base your monetary policy decisions. Up until now, we've relied on survey data as a substantial part of that. And increasingly, Americans just don't voluntarily answer survey questions. I want to commend you for declaring your independence. We saw what happens in Argentina, Venezuela, and most notably Turkey when federal central bank independence is eroded. I would say ironically that had your predecessor caved to Trump and lowered interest rates below what economics would call for, we would have much higher inflation today. And that would have been bad for Americans. It would have been absolutely terrible for the Republican Party. So the independent, your agency has saved Donald Trump from himself. And finally, I would say don't rely on this distinction between the Cook and the Slaughter cases. The idea that every congressionally created independent agency isn't independent except yours, you don't want to be relying on that. The distinctions the court makes between your agency and every other agency are rather weak historically. Our capital markets support our business expansion and our economy. Money market funds are an important part of that, buying short-term commercial paper from corporations. Our payment system is designed to meet the needs of honest Americans. That's why we have an anti-money laundering, know your customer rule that makes it a bad system for drug dealers, sanctions evaders, et cetera. There's a rival to these institutions, and that is a cryptocurrency, which literally means hidden money, and is designed to, and then we have in particularly stable coins, which are just like a money market fund, except you earn zero interest, and everything is hidden. Now, the Federal Reserve established liquidity facilities to support money market funds in the last crisis. Will the Federal Reserve support cryptocurrency or stable coins if they face a run-on from investors?
So Congressman, thank you for mentioning many of those issues. We talked about a lot of them in your office, so I appreciate it. I still have the scars from the 2008 financial crisis. I still have the scars from the extraordinary efforts that my colleagues and I, under Chairman Bernanke's leadership, had to do. That is not something we want to repeat.
Can you assure us
that we need
that you will not be bailing out stablecoin and cryptocurrency?
So I don't want to, I can be more broadly than that. We do not want to be in the bailout business, full stop.
But your predecessor did provide a liquidity function for money market funds. If God forbid we faced a similar circumstance in the crypto world, would you bail them out?
So I want to be very clear. We're going to do everything we can to mitigate those sorts of extraordinary risks. If and when they were to come in the next 4 years, we want to be in a position we're not bailing out anybody, including crypto.
You're not really answering the question. Obviously, everybody prefers our economy works well. And I'm certainly concerned with giving non-banks direct access to the payment system and this Kraken filing with the Kansas City Fed is concerning, but I want to move on to Basel III. Your predecessor said that the capital requirements for banks in 2019 were about right. The current reproposal substantially raises those capital requirements. Were capital requirements about right in 2019, or should they be higher than that today?
So the good news is we have a proposed capital rule that's out for comment. I'm quite interested in getting the reports and the comments on that, and I look forward to reviewing those and making a judgment. I would say as a first principle, strong capital ratios, strong liquidity ratios, strong supervision, and strong market discipline, they're all of a piece to ensure we don't find ourselves in a world where there is unsafe or unsound institutions.
We, of course, want strong limits. On the other hand, if you go overboard, you hurt economic growth and hurt the economy. I hope in that review process, you'll look at low-income housing tax credits, where you've already moved from 400% to 100%. It should be closer to 20%. These are very stable assets.
Gentleman's time has expired.
My time has expired.
Appreciate you, Mr. Sherman. The chair recognizes the chair of our subcommittee on financial institutions, the distinguished gentleman from Kentucky, Mr. Barr.
Thank you, Mr. Chairman. And Chairman Warsh, congratulations on your confirmation and swearing in as the 17th chairman of the Federal Reserve. I am grateful for your commitment to reforming the Fed, and that appreciation is surpassed only by our shared love for Kentucky thoroughbreds and your love of the great sport of horse racing. Let me just ask you, first of all, since you're swearing in over 7 weeks ago, things seem quite a bit different over at the Fed. A few examples: elimination of forward guidance, abstaining from the dot plot, creation of these 5 specialized task forces, and maybe most impressively, taking accountability. Instead of blaming inflation on the pandemic or supply chain interruptions or tariffs or the Strait of Hormuz, you are saying that inflation is always and every time the result of the Fed supporting printing too much money. Tell me, Mr. Warsh, you appear to be quite different from your predecessors. How are you different?
So I've known 5 of my predecessors. I've learned particular lessons from each of them. I can only be my own man. I served before at the Fed for about 5.5 years under Chairman Bernanke, and I learned a lot of things then. But you're right. In 6 weeks, we have caused, I think, a sea change in new thinking, the beginning of a set of reforms that are going to be put in place across at least 5 dimensions in monetary policy. And it's a broader discussion about reforms that will be forthcoming in everything we do, including supervision and regulation, where there's already been a good start, in payments and the rest. We made a lot of progress in 6 weeks, but I think it's important to use this opportunity wisely. The 63 months of inflation above target has been an unfair burden and has been a tax on the American people and businesses. We plan on getting rid of that tax. If that means we need a regime change in policy and we need new consideration of practices, some of which have been working, some of which haven't, that's what we aim to do. And we're just getting started.
Well, I appreciate your commitment to being different. Let's talk about overhauling Fed communications. This from a Wall Street Journal editorial on June 15th. They write, few innovations since 2008 have been as counterproductive as the adoption of forward guidance as a policy tool. The constant yammering, long policy statements, press conferences after every FOMC meeting, nonstop speeches by Fed officials, and above all, the quarterly summary of economic projections has exposed how little the Fed understands about the economy and trapped officials in errant policies. Chairman Warsh, why is it important to do away with the dot plot and end once and for all forward guidance?
Well, Congressman, I've made no secret probably over the last 15 years of my views on communications. I think when central bankers speak like I am before you, it's either one under obligation or in this case under obligation and purpose, which is to share a set of new reforms so that American households and businesses might say to themselves, this is a regime change in policy. We're only beginning it. I'm keenly interested in the views of these 5 task forces. And ultimately, these are decisions that are going to be made jointly. The best of the Fed's traditions are to work collegially, and I've really been quite impressed how open-minded my colleagues have been to take it up, specifically in communications. If we were to share with you our every passing thought, I worry not that there's anything wrong with us, but we're human. And if we were to give you my projection today about what we'll do when we meet in 2 weeks, what we'll do over the course of the year, that we then find ourselves sort of taking information that's consistent with our priors and rejecting information that's inconsistent. It's not the way we want to do things. We want to get policy right. And I think being somewhat more circumspect in our communications, at least for me, is a better way of calling balls and strikes.
Finally, thanks for your commitment on dealing with this mission creep. In recent years, the Fed has concerned itself with matters outside of its dual mandate, including diversity, equity, inclusion, climate change, and the like. That's why the Fed's joining the network of the greening of the financial system distracted the Fed from the very important job of price stability. How will you keep the Fed from rejoining the network for the greening of the financial system or veering into these peripheral and distracting matters that go beyond the statutory remit of the Fed?
By being very clear of our obligations. You told us that our job is full employment and price stability. You gave us plenty of other hard work to do. We'll have a series of reforms outside of monetary policy. Our plate is full. We will not be wandering into other areas, I can assure you, Congressman.
Thank you. I yield back.
The gentleman from New York, the ranking member of the House Foreign Affairs Committee.
Okay, we will get back to that, but I mean, markets are kind of taking the speech nicely. Look at SK Hynix go 15%. Micron's still getting hit, or at least not getting hit. It's green, but not really going up as much as the other memory names. But SK Hynix kind of taking off here. Palantir is a pretty big move on Palantir. 2.68%, but more than 10% from the lows of the pre-market. The neoclouds are still not fully green. Nebius at least back above 200, which is nice to see. 201. But why is the screen blank? That is so weird. Let me see what the issue is right there. That's weird. Can you guys see it now? No, it's not loading. That is very weird. I don't know what to say about that. I don't know what my computer is doing, but that's StreamYard. That's not me. Let me see if I add another scene right here. You know, it did this bug like a year ago, and for the whole show, it wouldn't show it. Let's see. I'm going to use a different screen. But the point is, Warsh's speech is not messing things up, which is good. Okay, this is not showing as well. All right, this would make me have to reset my computer, which I'm not going to do. Let's go back to what Warsh is saying. But yeah, the point is stocks are holding up, which is good. You're not getting anything too crazy out of Warsh, which is really important. And even these questions that they're really challenging him on, you know, he's not really giving the political answer, the answer that would show bias towards one side.
You and tells you how disappointed he's in you and all of that. Will you still do what the data tells you to do?
I will, Congressman.
You ready for that?
I'm ready to follow the law, and I'm ready for the Fed to deliver on the expansive remit that you gave us. I'll make only one other note. We have a wide lens. We're interested in what's happening in the war. We're interested in what's happening in military conflicts around. We have to take that all in, but then we have to shut the door and make our very best decision. That's what we're going to do in a couple of weeks, and that's what we'll do in the remainder of my tenure.
Trump just tweeted. I was wondering why Rocket Lab just got that big green candle. Did we get a taco? Did we get the taco? It's a long tweet. All right, bear with me. It's a long tweet. Everything's green, though, so I feel like we might have got a taco. Oil is flowing like never before, thanks to the awesome power of the United States military. Because of all the members of the most powerful military anywhere in the world by far, the Strait of Hormuz is open to all ship traffic except for Iran. And that is because of their lying, violent, malicious leadership, which is taking them down on their path of total destruction. We will therefore have a full blockade, but only on ships coming to and from Iranian ports or carrying anything that has to do with Iranian cargo. Based on highly productive conversations with Middle East leadership, I have decided to replace the 20% U.S. reimbursement fee with trade and investment deals that the various Gulf states will be making into the United States. We got the taco, at least on the 20% replacement or reimbursement fee. Wow, not even 24 hours. Not even 24 hours. Those investments will be massive, but at the same time, extraordinarily good for them and their future. As everyone is aware, we have the largest dollar investment in the United States of any country in history, but even these new investments will make that number even larger, and we will see factories, plants, equipment pour into the United States at historic levels, which will create additional millions of high-paying American jobs. America is winning again. The days of Iran killing hundreds of thousands of people are over, and most importantly, Iran will never have a nuclear weapon. Thank you for your attention to this matter. Okay, so I'm still a little confused. The reason I'm confused is because he's saying the Strait of Hormuz is open except for Iran, which is a little confusing given Iran still, from my understanding, controls the strait, unless he's talking about the traffic coming in through the blockade. But the part that's really bullish, which is why you're seeing a bunch of these stocks flip green right here, is that he is replacing the 20% United States reimbursement fee, which once again, I think the market didn't even believe that reimbursement fee was real because, I mean, it didn't make much sense how that would be implemented. Oil right there, 78.78. And as a result of that being replaced, you had a spike on some of these stocks. Now, will that spike hold? I don't know. But no more 20% cargo reimbursement tariff fee. And the Strait of Hormuz is technically open, is what Trump is saying, except to Iran. That part's a little confusing to me, but at least the theoretical tariff is gone. He's saying that's going to be replaced with investment into the United States and deals with Gulf states. I don't know what that means either, because, I mean, I guess he's announcing that Kuwait and Bahrain will be investing in the United States for these huge factory, plant, and equipment deals. So I guess instead of that 20% fee, it's almost like the tariffs, right? Instead of charging you a tariff, you invest in the country. That's what he did with South Korea and Japan last year. It seems like that's what he's doing with the Middle Eastern companies, or Middle Eastern countries. And I guess that's enough for the market to get a rebound. So a little bit of a move here higher, but still a bit confusing on what exactly this new blockade looks like. But the 20% fee should be gone.
But what objective standards must any firm satisfy before you conclude that the benefits of innovation outweigh the risks to consumers and the broader financial system?
I like the way you think. A benefit cost test is a good test for economists like us, and the benefits exceed the cost, and that's the kind of policy, procedure, and objective we want to pursue.
Thank you.
Thank you, Congressman.
Gentleman yields back. The chair recognizes the chair of our Capital Markets Subcommittee, Ann Wagner of Missouri. You're recognized for 5 minutes.
Hi, thank you, Mr. Chairman, and welcome, Chairman Warsh, and congratulations to you. My work on the Capital Markets Subcommittee as chairman has been focused on giving the American people and our small businesses more options and access to our markets, giving the everyday investor and the local employer better opportunities to grow their financial future and kind of on their own terms, I'd say. Under the previous administration, we saw a heavy-handed regulatory approach that aimed to strip risk out of our markets entirely. And time after time, the Biden-Harris administration pushed policies that limited financial freedom and stifled growth. Our capital markets are, as we all know, the envy of the world, and that is because we allow Americans to weigh risk and reward for themselves and make the financial decisions that are best for them and their families. Chairman Warsh, at a high level, how do you view the Fed's role relative to the financial system, both as a central bank and as a bank regulator. And I guess what I mean is, should the Fed try to engineer all risk out of our economic system, or should it act as a prudent observer that only intervenes when truly necessary?
So, Congressman, it's a leading question, which I can answer with we need to strike the right balance. We are not trying to take risks out of markets in normal times. The economic growth that I mentioned to your colleague just a moment ago comes about because of a certain dynamism in our financial markets, which comes from a dynamism in the real economy. That isn't created by the Federal Reserve, but we can be a foundation with clear, steady policies, delivering on the remit that you gave us, so that the American spirit and American economic growth can continue to be the envy of the world.
Something on the top of mind for myself and certainly for my constituents in Missouri's 2nd Congressional District is the state of the economy, including the cost of living, job growth, and interest rates. Though it is often characterized as being tasked with a dual mandate, the Fed, in fact, has multiple statutory mandates, including stable prices, maximum employment, moderate long-term interest rates, and financial stability. When the Fed leans into one of these goals, sir, it can create ripple effects on the others, forcing a balancing act between competing priorities. Chairman Warsh, how do you weigh these different mandates and the trade-offs between them?
So I'm a little different than some in the economics profession on that, Congressman. I do not think we have a cruel choice between stable prices and full employment. I think the mandate that you and Congress gave us are entirely consistent. If we can ensure stable prices, the American economy can thrive, businesses can hire more employees, and the dynamic economic engine we talked about can continue to be the envy of the world. I don't think we have to run a balancing test. I don't think it's an either-or proposition. We're in the business of doing what we can to ensure financial stability over a business cycle and financial cycle, and we're always in the business of ensuring stable prices and full employment. At different times, our focus, our lens has to turn to one of those priorities, but I think they're entirely consistent with each other.
Which leads to my next point here. There are some who believe, Chairman Warsh, that the Fed should be used as an everything regulator, where instead of acting as an observer of markets, the Fed attempts to actively manage them beyond its statutory responsibility. Chairman Warsh, how does this mission creep affect the Fed's reputation? And should the Fed take actions beyond those specifically authorized in federal law?
We should follow the law. There is a tendency when circumstances get tough for any regulatory agency, any agency to go to the edge of their authorities, but that's when politics enter the door. My objective, the objective of my colleagues is to keep politics out. And the way we do that is we steer clear of things that we aren't authorized to do.
Gentlewoman's time has expired.
My time's expired, and I think that's the answer we're looking for. I yield back.
The chairman recognizes the ranking member of our subcommittee on digital assets, Mr. Lynch of Massachusetts, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chairman Warsh. Good to see you. My congratulations. Intelligence itself will be the entity that we have to confront. And I just worry about the broader impact of what's going on right now. There's tremendous resources, as you know, being poured into AI. I just hope that the course of regulation does not meet the same fate that the regulation of crypto did, where the crypto industry spent close to $250 million up here on Capitol Hill, and they got the bill they wanted. If that happens with AI, we are in serious existential trouble, not only in this country, but in this world. And I do believe that the Fed, in your position, has influence, has the ability to seek out those dangers that others may not identify. And I just ask you to please consider your role and the resources that you have, that maybe you can put a task force together to look at the broader implications of this, the adoption of AI. They can't even show us, they can't even explain some of the things that they're using right now. The explainability gap is enormous, but I welcome you. I wish you the best. I really do. I wish you the best for all of us.
Gentleman's time has expired.
I yield back.
Chair recognizes the gentleman from Georgia, the Vice Chairman of our Financial Institutions Subcommittee. Mr. Loudermilk, you're recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Walsh, welcome. Thank you for being here, and Godspeed with the position you now have, and we wish you the best of luck. First, I want to talk about Operation Choke Point. As you are fully aware, Operation Choke Point 2.0 involved partisan actors at the Fed using, quote, reputation risk as a means to target and debank firms and individuals in the digital asset ecosystem. The energy industry, and really anyone that partisan actors at the Fed believed unworthy of a bank account or loan. This was especially egregious given the fact that the Fed does not have a statutory authority from Congress to supervise for reputation risk. While I'm happy that reputation risk has been wiped from the Fed's guidance to examiners, can you please tell us what steps the Fed can take to durably ensure that statutory silence is never again abused by partisan actors to attempt through the Fed what they cannot make through law in Congress, and also what actions that you may be taking?
So thank you, Congressman. Reputational risk has been removed from the dashboard that supervisors and regulators will have anything to do with. My view is that being a good supervisor and regulator is tough business, and we don't need to make it harder by bringing politics into it. Vice Chair Bowman has begun a series of reforms before I arrived in this. And I think you're going to find in the coming quarters and years, we're going to continue to reform and refine our regulatory system so that we can have a safer and sounder financial system. And I'll add a more competitive one too.
All right. Thank you for that. And we appreciate your work in that area. The Fed currently holds a considerable share of federal debt and has for almost 2 decades now. With a ready buyer and low interest rates, it's not surprising that Congress has been incentivized to run up large and growing deficits over the same time frame. You've spoken before about the Fed's role here and the threat of monetary dominance and fiscal dominance. How can the Fed get out of the business of underwriting Congress's fiscal irresponsibility?
One thing we can do is think hard about when we're going to be buying debt from the Treasury. This might not sound like perfect virtue, but when we have a crisis like in 2008 and 2020, my view is you created the central bank to take extraordinary actions. In more normal times, in a more normal business and financial cycle, fiscal policy needs to be a decision that you make with the administration. Fed should have nothing to do with it. I've set up a task force to focus on the balance sheet, to ask the question first, what's the effect of the balance sheet on the conduct of monetary policy and ultimately inflation? Second, what are the pros and cons of different regimes? I'm not of the mistaken view we can go back to where we were when I arrived at the Fed in 2006, but I think there are several other sustainable equilibrium we can achieve. And the third question is equally important. It took us nearly 18 years to find our way into this balance sheet. We're holding a lot of long-term Treasury debt, long-term mortgage-backed securities. We won't be able to make changes overnight. Any changes that we make would be well deliberated, would be public, would be understood, and there'd be quite a bit of time before any of that was operationalized. I look forward to the recommendations of the task force, and I look forward to hearing from my colleagues around the FOMC as we contemplate alternatives.
Thank you for that. And what are your greatest concerns with regard to the threat of monetary dominance?
Yeah, so you have a different job than we do. The independence that many of your colleagues have spoke about this morning is a political and economic decision to give us the pen on interest rates, to let us be the deciders of monetary policy. I've always taken that as part of a bargain. You're giving us independence in that, and my judgment is we should be staying out of fiscal policy. We shouldn't be weighing in, no matter how tempting it might be. either directly by buying assets that have some flavor of fiscal policy, or by opining on subjects that really isn't our business. We're going to try to stick in our lane at the Federal Reserve. We've been good at that for the last 6 weeks, but there's always a temptation to wander in other areas. I'm going to try to be reserved in my comments on fiscal policy with you and your colleagues. That's your job. It's not mine.
Well, thank you for those answers. They're very thorough and very refreshing to hear. And with that, Mr. Chairman, I yield back.
Gentleman yields back. Chair recognizes the gentleman from Houston, Texas, Mr.
Okay, I think that is most of what we're going to be getting here from Mr. Kevin Warsh. I don't think we're going to really get anything too different. Again, pretty much all of the comments that he made essentially are now, I mean, I guess getting priced in. You're seeing some of the software names take a little bit of a breather as they're not flipping red, but they're definitely relaxing a little bit. Palantir down from 133. I don't think Weeble's going to let me share. I don't know why this thing isn't working today, but unfortunately we can't see some of the prices here. But Palantir right there, 132.95. You got Rock Lab that came back as soon as that Trump tweet came out. Micron 978. The semis actually are flipping green again, or flipping back to where they were in the pre-market, which is very nice to see. SK Hynix just crushing it, like really crushing it right here based on this announcement by Trump, I think, which is helping all the memory names starting to get a lot more love. 20% reimbursement. Yeah, let me try restarting Rebull. That might also help as well. 180. So this is the highest price we've seen on SK Hynix basically since it's IPO'd. The highest price we have seen on SK Hynix since it has IPO'd, at least in the US markets. 177 was what we had back in back on Friday, and now you're seeing here at 180. I think it's a problem with Webull, guys. It's not even loading on my computer as I try to restart it. Did I say restart? I mean restart. Okay, now it's loaded. Let's see if it pops on the screen. No, that's a StreamYard issue. StreamYard's being stupid. StreamYard is being stupid. But yeah, overall, I mean, software now taking a breather. Semis getting back to the rip they were having. S&P at 752, which is nice to see. ARM was down 7. Now it's only down 4. Micron, again, look at that, getting some really nice green candles, 982. And then Robinhood. Okay, Weeble's telling me to do an update. Let's see if that fixes it. Robinhood also trying to come back from the dead. It's now at 110. It was stuck at 108 the majority of the day. How about IBM? I think that one's still getting hit. IBM, yeah, wow, 26% down, 0 recovery on Mr. IBM right here, as this one has just continued to take an ugly hit. What do we think of Warsh? Do we like him? Do we think he's kind of having the right trajectory for how the market should be thinking of what's going on right here? Yeah, that's got to be a StreamYard thing, dude. That is so weird that Weeble's not showing it. That's so freaking weird. But I feel like Warsh didn't answer any of the questions that, didn't need to be answered. Like even when they brought up Trump trading stocks and all the other stuff that he's doing, Warsh is like, hey, that's your job. If you want to stop Trump from trading stocks or politicians, that's up to you. That's not up to me, which I think is a fair argument to make. And Reddit right there, trying to get back above 200. Also, in terms of the Fed future guidance, which has really been the big reform with Warsh, is that he's not going to be giving out future guidance. He's not going to have the market judge, 20,000 interviews that the Fed presidents give after. NVIDIA also flipping green right there, 2.5% after they give the FOMC meeting. I think that was a big part of the story. was a big part of the story, just in terms of, the market once again getting used to Warsh not being like Powell, which would say one thing and then say a different thing next month. I mean, I really do think it's better for the market to not have that type of forward guidance and see how stocks react if you don't have 15 different Fed presidents saying the same thing. Yeah, he talked about the task forces as well, which we're going to see once those come into action, what's going to play out. Oil, is that down? We were at 78 in the morning. After that Trump tweet, we are still at 78.50, so not a meaningful retrace, but still slightly down. Reddit 240 or 200.40. Figma's been great today as well. Figma past 24. I think it's just below 24 right now. Shopify 124.50. Meta going green. Google also flipping green. Mid thoughts on Meta. I like Meta here. I am just afraid that they are going to announce an equity dilution like Google did, which if they do it, it's whatever, right? It is what it is. But I do think it's very possible that they end up doing it. So we have to see. So far, the market not caring too much about this. Yeah, Bitcoin and BMNR, again, this is the first day in a long time Bitmine's had a 10% move. And I obviously think that's part of the CPI report that we got. SK Hynix still up 13%. Bitcoin getting the nod above 64. You had some good Clarity Act updates come out yesterday. I don't think it's really any of the crypto stuff, though. I think it's because of CPI being so much better than expected, which is what you need for these risk-on assets. However, Warsh did talk about crypto. And I mean, what did he say? He said, we're not going to disrespect it. We're not going to act like it's not a big thing. We're not going to try to intervene in terms of what Congress is trying to do with digital assets and regulation. And you didn't have that level of certainty from the crypto names, or from the previous administration when it came to crypto for the past 6 years. And I think that also is probably really good for ETH and BTC. I love how Warsh is educating the board on less lagging indicators as a fresh way of thinking, but very fundamental, logical. Yeah, I mean, it is pretty fundamental to just say, hey, we are going to focus on the shit that matters, and we're not going to be rooted in these lagging factors that, we talk about on TV, but that have zero relevance to actually figure out what the trajectory of inflation is going to look like. Also, I think the other thing that Warsh said, which was really exciting, was that, he said the days of inflation running past expectations are over, meaning he's serious about combating inflation, but he's not going to do it in a way that makes the market flip their head every other day around, where we think expectations are going to go. As Tesla tries to get 400, 399.23, but still kind of stuck right there. Let's go back to Warsh, see if he's saying anything else. And if not, then we'll see if we have any other headlines that we have for today.
President Trump's meme coin, $Trump, profited an average of $1.74 million per day over his first year. $1.74 million per day. This amounted to approximately $636 million in total royalties and licensing fees generated at its launch. While this was happening, during that same period of time, nearly 1 million investors lost a combined $3.8 billion. This is because that meme coin lost value, dropped precipitously in value. It was a bubble, by the way. It is nothing. Anybody who's listening to me, if you've invested in a meme coin, you've invested in nothing. Zero. In a righteous world, it would be illegal. But given the Secretary of the Treasury that we have currently, it is not. And that's very unfortunate. SEC, the Secretary of the SEC, it is not. I think that we should concern ourselves with these speculative bubbles. And whether you like it or not, you have to concern yourself with it, because when you lower interest rates, you lower the rates such that there's more capital available for people to use for speculative reasons. So you have to be concerned about it whether you want to or not, because you don't want to see a speculative bubble. Can I have your assurance that you will be concerned about these speculative bubbles, Mr. Chairman?
So Congressman, we want a resilient, strong, safe financial system. And we are looking at financial markets and we're looking at the real economy to make sure we deliver on what we can. Some of these other subjects are really more in your purview and responsibility.
They're in my purview, excuse me for interrupting, but I have to. They're in my purview, but only because I choose to have them in my purview and I make an issue of them. I have to vote on them. But they're in your purview too, because you decide whether the rates go up or down. And if you lower them, then people can engage in these speculative bubbles, such as the Trump meme coin, and they can lose a lot of money. Losing billions of dollars while the president makes millions on a daily basis. This is the epitome of ridiculosity. At some point, we all have to take a stand, Mr. Chairman. This is going to be your opportunity. You're going to have to take a stand at some point because this president is interested in making money. He puts money ahead of the people of this country. The people of the United States of America are secondary when it comes to the president. They may even be tertiary or quaternary, but they're not first. And at some point, you're going to have to make a tough decision as it relates to this president. Look, I'm not going to prejudge you. I'm going to assume that given your statements and the latitude that the Supreme Court has given you, that you'll make the right decision. But you're going to have to be concerned about a speculative bubble, especially as it relates to crypto. This is something that we'll all have to address. I thank you very much.
Gentleman yields back. Chair recognizes the Vice Chairman of our full committee, Mr. Heisinger of Michigan, for 5 minutes.
Thank you, Mr. Chairman, and Chairman Warsh, congratulations. I join many of my colleagues in seeing you there as a very positive thing. In late 2021 and 2022, as has been referenced by a few others, the Fed had recognized inflation was not transitory. I'm reminded of actually a hearing we had where we had then Secretary Yellen, former Fed Chair Yellen, sitting next to the then current Fed Chairman. And when I brought up the question about whether it was transitory, they did not have the same answer. And it was interesting seeing how that lag, and it sort of played into the fear that many of us had that there had been more to this foot dragging coming out of the Biden administration. The quick question is, while the appropriate speed of a response depends on what is driving inflation, I think you would certainly agree. I'm curious your view of how the Fed should make that judgment and act quickly once it does, because I think, as has pointed out, there was a lag.
So, Congressman, I appreciate the question. We only look to the past for lessons learned. We're not trying to relitigate the decisions that are made of our predecessors, but the reforms that I've already announced in communications, that have been conduct of monetary policy better, swifter, more sound, so we can deliver price stability. Our number one objective is to get policy right. And my judgment, as I said to one of your colleagues before, is that demands an open mind. That means not pre-committing to decisions before we take it up inside the four walls of the Federal Reserve. And so you'll hear from me a lot less forward guidance and a lot of listening. Generally, as a practice, what we're going to try to do, especially at the beginning, is deeper, more serious discussions among us, fewer pronouncements.
So I appreciate you don't want to relitigate the past, but I do think, as we all know, we also learn from history. And during the previous administration, the Fed took some pretty major regulatory actions, some within its statutory authority, and in my view, maybe excessive, but others that were clearly beyond what Congress had really authorized. And everyone agrees a safe and sound banking system is essential to monetary policy, the economy, and the American people. But when the Fed exceeds its statutory authority, or reinterpretations or interprets old laws to claim new powers, that to me is mission creep. Can you assure us that future bank regulatory proposals will respect the important procedural guardrails established by the Administrative Procedure Act? The APA has been in many ways trampled, I believe, which often received only nominal consideration under the previous administration. How are you going to handle this?
So we're going to follow the law just as you say. You've established a set of laws. There's a set of regulations by which changes in supervision and regulation, changes in guidance can be made. We intend to follow them with an objective, as you mentioned, of a safe, sound, and again, I'll add, competitive banking system. Is a huge strength for the United States, and our banking system is stronger and more resilient than most around the global economy.
Expound a little bit about your views of the importance of a banking system to the American people and the benefits to them of a Fed sticking to the authorities that Congress has given it, and rather than going far afield.
Yeah, so we've got to keep politics out of the Fed. Politics can find their way into the Fed through any of the range of powers that you've given us. Our supervisors and regulators have a lot of authority over the thousands of banks that are regulated in the United States. Explicit authority and also authority when they knock on the door and they ask a series of questions. One of the great strengths of the U.S. economy is the diversity of institutions we have in the banking business. Most of the G20 counterparts we have, they have a handful of banks. They're implicitly backed by their government. One of the untold strengths of our economy is the diversity of our banking system. We've got regulators that need to ensure that the regulation and supervision are tailored to what happens in those institutions. One size fits all might work for other countries. It doesn't work in the US. And the vision I have, Congressman, is liquidity and credit that comes up from the real economy through the banks.
Thank you.
And gets aggregated, not top-down liquidity provided by the Federal Reserve.
Thank you. I yield back.
Thank you.
All right, that is Warsh. That is what we got for today, folks. Equities, again, SK Hynix doing well, Micron doing well, the hyperscalers taking a breather, software names also taking a breather, but the semis starting to come back. It's kind of hilarious. Like, as the software stocks get some red candles, Palantir, Zeta, Reddit, Figma, the semi stocks get green candles, and that's kind of just where we're at right here. Rubrik, that's going up. Again, Trump, 20% cargo tariff going away is bullish, but I don't know how long the market's going to interpret that to be bullish. Oil starting to tick back up again, 78.80 up from 78.50. We are below 80 though. CPI was good enough to get us below 80. Hopefully we stay below 80. But overall, nothing that Warsh said necessarily changing some of the price action that we saw over the past few hours. Are the CoreWeaves and the Nebiuses of the world still down? They are still down. Not lows of the day, but still down 3 to 4% each. All right, so we'll be back on the market close with Technical Tuesday. We'll have Jason on. We'll see kind of what he's thinking about the overall state of some of these markets right here. Word of the day. Oh, this is a crazy one. I have never seen this word before. Eleutheromania, an intense or irresistible desire for freedom and independence. His eleutheromania drove him to leave a comfortable corporate job and build his own business from scratch. Have you guys heard this word? I have never heard this word. IBM is down because they put out preliminary earnings and the numbers were not good. And they said CapEx spend is going to, or software spend is going to CapEx spend. That's why that stock is getting hit. Yeah, I have never heard this word before. Eleutheromania. Oh, this is the website that makes you watch an ad to hear it. Let's go to this website. Eleutheromania. I actually think this is a word we could use more often than not. Okay, let's see if this website tells us. IBM's still down about 24% on the day. Okay, I think we got it right.
Eleutheramania.
Eleutheramania. There you go. That's what we got. You guys have heard this word before? I've never heard this word before. It comes from Greek eleutheria and mania. It captures the mindset of entrepreneurs, explorers, and anyone who values autonomy above comfort. All right, cool. That is what we got. Again, IBM taking a hit, not taking all the software names down with it. The semi names doing relatively well after the software stocks are getting some red candles. We'll see if that flips towards the end of the day. And Kevin Warsh, relatively bullish for the future of the Fed. Crypto said some good stuff. Overall, said inflation is the main concern, and it looks like the market is at least believing him there. It didn't sound like he wanted to give a hike, but it also didn't sound like he wanted to give a hike or a cut. So if we at least stay neutral, hopefully that'll be okay going into the end of this year. How many spelling bees did you get? You know, I competed in one spelling bee. I told the story before. The word that got me out of the spelling bee, it's so sad. This was back in 5th grade. I should have won the freaking spelling bee. I spelled calendar wrong. I thought it was D-E-R instead of D-A-R. I spelled calendar wrong. If not, I would have been a 5th grade champion for the spelling bee. Unfortunately, that didn't work out. So calendar. That was the one that got me. All right. Thank you, everybody.